am positive because it is definitely a change in tone.
There is a lot of optimism everywhere about what the U.S. could do.
There is reason for optimism. There are green shoots that people are able to point to.
The U.S. is at the epicenter of all discussions.
As America goes, so goes the world.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday with a huge shake-up in global tech. Check out equity futures down across the board. The pressure concentrated on the Nasdaq. Moments ago, the Nasdaq 100 was down by close to 5%, now negative by 4.7. Nvidia down double digits plus. Nvidia in the pre-market negative by 13%. Unlucky for them. DeepSeek, a Chinese AI lab demonstrating they can do more with less and raising huge questions about the whole CapEx narrative and the beneficiaries of it.
The disruptors are becoming disrupted, and that is basically the theory and the fear with some of what DeepSeek promises, which is, as you say, to do more with less. They don't need the $100 million investment. They need a $5 million investment. They don't need the huge data centers and the same types of energy. They just need a little bit, and it makes it something accessible for a lot of different companies, if it is actually true. The key question is, though, how much does this demonstrate how lopsided this game has been in the market, with a couple of names really taking all of the momentum?
So as Lisa suggested, it's not just Nvidia that's getting hammered, the big spenders, Microsoft and Meta down in the pre-market as well. The buzz around this over the weekend was absolutely massive. Do you remember the buzz around the utility players over the last 12 months as well? Check out Siemens Energy over in Europe. The biggest decliner on the DAX this morning. We're down by 20.6%. That one's getting absolutely nailed as well. I think we've got to ask a question as to whether this is really real, Lisa. So let's get into that. Mizuho this morning putting out a note and asking if it's a synthetic scare and raising questions about whether this was subsidized by the state in China. Those questions will be asked repeatedly throughout this morning.
It's an important question. It's an important point. Essentially, is there something behind the scenes that isn't as efficient, that isn't as using just so many fewer GPUs, so many fewer chips from NVIDIA? It raises a lot of questions at a time when potentially this is a fragile U.S. market that is really concentrated in a couple of big tech names. And if they could be disrupted, could that remove some of the U.S. exceptionalism story that potentially could hurt China?
If they have done this, they've done this with serious limitations to chip access.
Well, that's the whole, really, what's ironic about this. The U.S. was trying to avoid this. They had export controls on the most advanced chips, so China, DeepSeek, was able to develop this AI model without that. In an interview last year, this is what the founder said, quote, "The problem we are facing has never been funding, but the export control on advanced chips." And it seems they were able to get to this pretty incredible point, potentially without that access.
What a time for this shake-up to happen. Earnings season this week. Check out the calendar. Wednesday, Microsoft, Meta. We'll hear from Tesla as well. Thursday, Apple. Then next week, you're going to hear from a whole lot more, including the likes of Microsoft and Amazon.
What's fascinating to me here is the spend that a lot of these companies are making towards some of the investments in chips, et cetera, data centers. Will they be punished for those investments? We heard about Meta being some $50 to $60 billion of investments. Will that become a liability for them at a time? But there's a real question about whether those types of investments are needed.
Which is why this is such a painful moment. Jordan Rochester, in that note you were mentioning, Jonathan, talked about this is happening after we just saw what he calls a Texas Hold'em all-in push on chips that's coming not just from Meta and NVIDIA, but also this White House when it comes to Stargate, pushing millions and millions, billions of dollars towards AI and all-inclusive of what that means, data centers, chips, and the likes.
Futures negative then, down across the board. We're down by 2.5% on the S&P and down a whole lot more on the Nasdaq 100. Coming up this hour, we'll catch up with Steve Chiavarone of Federated on the latest sell-off in equities, Rob Casey of Signum as President Trump walks back tariff threats against Colombia, and Nela Richardson of ADP ahead of the Fed decision on Wednesday. We begin this hour with stocks falling as Chinese AI startup DeepSeek demonstrates it can do more with less, raising questions over the future of America's tech dominance. Steve Chiavarone of Federated joins us now for more. Steve, it's good to see you, sir.
Good morning.
What's your initial reaction to this? So it's obvious that for the chip players, if this is real, not great news for NVIDIA. For the energy providers, the likes of Siemens Energy, not great news for them either. What does it mean for the big spenders of the last 12 months, the Microsofts, the Metas?
Yeah, I'm not built well for panicking, so I know that there's a lot of excitement and panic this morning, and I'm sure it'll be an ugly day in the market. I think there's three key points here. The first one is it real, right? Is it real, or is there some spending that's not being accounted for? Let's take a breath and find out. If it is real, I'm not sure it's as universally bad as everybody wants to make it out to be. It certainly is for the chip makers. It certainly is for the kind of infrastructure build-out play here. But in terms of AI implementation, in terms of the AI build-out, if you're telling me that companies like Meta, Google, you pick the company, if they can implement effective AI without the CapEx, meaning that there's more cash flow that can be returned to shareholders or can be invested in other areas, that's not a bad thing. Now, it's not great from a geopolitical perspective, but from an efficiency perspective, what we may be at here is we've just crossed that Cisco moment where it's all about the modem, but now it becomes about building out the internet, using the internet, and creating new business models around that. And then I think the third point, and this is one that always bears repeating, that no one's wanted to hear the last couple of years. This is why you build a diversified portfolio. It's not great to have the entirety of your capital in 7 names, because things like this can happen. Disruption happens. And if you look today, yes, there's carnage across the market, but the value stocks look a heck of a lot better, and the small caps look a heck of a lot better, and you only need a roof when it's raining, John.
Right now, it's raining, so let's talk about that. Yeah. The decline that we're seeing in the likes of Microsoft and Meta, I know traditionally we don't do single names with you. Do you think there is an opportunity to get into those names now, or would you wait to see things settle down?
I think there will be. I mean, I think you're going to see a few days here of rethinking, right? You're going to have some algos hitting sell today. You're going to have people asking questions about what's the right valuation. It'll be very interesting to see what the earnings reports are going to be like this week. Can company management pivot to talking about, hey, this is real or it's not? And if it is real, here's some savings we may be able to achieve on CapEx. That might be early to do that, within the next week or so. And so I'm sure these names will be under some pressure. But again, I look out and I say, right, the story wasn't about, the AI story is not about who can spend the most money developing AI. That was never what it was about. It was about who can utilize AI and monetize it to make their company or their moat that much better, who could deliver that solution. And if this allows them to deliver that solution quicker or cheaper without the bottlenecks of energy or chips, so much the better over the long run.
Does it undermine the U.S. exceptionalism story?
No, I don't think the U.S. exceptionalism story was built just on ChatGPT. I mean, I think it's built on this idea that, A, we are the greatest innovator in the world. Yes, you may have found a cheaper way to do this, but...
In China.
In China, yeah. No, I mean, look, this is not a country that isn't, competing hard. But when you look at the U.S., you have kind of a population growth advantage over the rest of the world. As bad as our demographics look compared to our past, we don't have the 10, 20, 30% working age population declines that you do have in China and Japan and Europe. And then also, okay, great, you took a technology, you made it more efficient, but, let's not forget that the Magnificent Seven are magnificent for a reason. One of them owns social media, the other one owns smartphones, the other one, I mean, you can keep on going down the list. So yes, does this mean that there are other companies in other countries that will compete and challenge that dominance? Sure, but that world existed last Friday as well.
In the middle of last week, I was looking at the calendar ahead, and I was looking to what was coming up the pike today and this week. It was the Fed decision, it was core PCE, it was the earnings for some of these tech players. And then, of course, there's the overlay of all of the policies. And I'm thinking, wow, what a maelstrom of information. Yeah. Now none of it matters, right? It seems like basically the Fed and the government are basically off sides and the technological advancement is in the front seat. How much is that the reality? Is that really what's going to suck all the oxygen out of the room at a time where there's a lot of noise elsewhere?
I think that's why you buy. I think that's why you buy if you see weakness here, because there's a lot of positives that are out there otherwise, right? Again, yes, there's going to be some disruption. Maybe the Mag 7 aren't as dominant as they have been. I don't know that that's a bad thing, right? I think if you see a market broaden out, if the beneficiaries of AI start to play out here, companies that can use and implement this technology to become more efficient, if that's cheaper, then that broadens out that opportunity set. But you've got a lot of positives going on, right? You've got inflation that's come down from 9 to 3. We think it's going to 2.5. You have a Fed that, despite what they say, they're going to cut a couple times this year. I think the data is going to push them there. You've got tax rates that are likely to become lower. And so this actually enhances a theme that we've been talking about a lot over the last couple of weeks, where if you look at what's a pretty constructive outlook for us for this year, and you try to figure out what are the downside risks and the upside risks, all the downside risks are shorter term, right? It's concern that inflation won't come down, or the Fed in this kind of little stubborn period, or the sausage making over policy, or now, this concern that we've got to work through. On the other side of it, though, is inflation that is coming down and rates that are going to come down and policy that is going to get made. And I think what you'll see is that, maybe Cisco has had its moment, maybe if NVIDIA is this generation's Cisco, but now there's opportunities potentially for a whole host of companies, if this is real, to implement AI much cheaper, much more effectively, and that's going to be the real value here.
If this is real, you mentioned geopolitical concerns. Do you expect more policies like export controls or tariffs because of this?
I think it's incredible, Annmarie, that, we had the Colombia episode yesterday with the, we're not letting you in, then we're going to tariff you, and now we're letting you in thing. And we didn't even talk about that today. I mean, in any other week, that would have been like 90% of this discussion. I don't know. Look, I think that this president is certainly going to use tariffs as a negotiating tool. We saw that very well on display this weekend. And I think, generally speaking, there's bipartisan support to make sure that the United States remains the leader in emerging technologies. And I don't think that changes today. Remember this, when Sputnik was launched, it was a shocking moment to the United States. We still got to the moon first. And I think you may end up seeing the same thing happen.
So do you think that maybe this is a wake-up call, and then we can see even a bigger push from this administration when it comes to things like AI? I don't know how much bigger you get than Stargate.
Well, I think if it's real, it is, because it tells you that you just can't throw money at it. You've got to innovate. You've got to let the engineers lead, as opposed to just think that, that's a story about throwing money. So we'll see. Again, it may not be real, but if it is, maybe you've got to think more holistically about how you support those companies and not just throw chips. And by the way, here's another interesting tidbit here. Does this make Taiwan less important? And does that lower geopolitical tensions? Because if you can advance in AI without invading Taiwan, well, that's a lot cheaper, isn't it?
Right now, we're selling first and asking questions later. Steve, it's good to see you, sir. Thank you. Steve Chiavarone there of Federated Hermes. Futures down across the board here on the Nasdaq 100, down by more than 4%. Bramo, looking at NVIDIA in the pre-market, down by close to 12.
I love what Steve said about the Cisco moment. We've been talking about this for a long time, and Michael Wilson over at Morgan Stanley talking about how there's going to be a shift from the infrastructure, the chips, to the application. Is this that moment, regardless of the truth, the veracity of exactly what's happening here?
Certainly feels like a big moment. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John, just to emphasize the hype, DeepSeek, that Chinese AI startup you've been talking about, is now top of the iPhone download charts. Buzz grew over the weekend about their latest model being cost-effective, as you've been talking about, while running on less advanced chips. NASDAQ futures, just another check on those, tumbling down 4 1/3%. Elsewhere in this market, Ryanair shares are rising 3.5% in the London trade. The European low-cost carrier posted stronger than expected third-quarter earnings driven by holiday bookings. It also cut its passenger growth target for the second time in 3 months due to Boeing's delivery delays. But Ryanair said the constrained market for aircrafts will also help them command higher prices. Now let's get the latest on the wildfires in Los Angeles. The region is getting its first rainfall in months, but that's posing a new risk of landslides. Right now, a flood watch is in effect for Los Angeles County, and several roads are closed due to mud flows. The Palisades fire, that's more than 23,000 acres, is now 90% contained, while the Eaton fire that destroyed much of Altadena is 98% under control. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the tariff threat in action.
To me, the most beautiful word in the dictionary is tariff. And it's my favorite word.
The tariff system made so much money. It was when we were the richest.
A conversation just around the corner, live from New York City this morning. Good morning. Stocks down and down hard. We are negative by 2.4% on the S&P 500, down by more than 4 on the Nasdaq 100. In the bond market, it receives a bid. Yields are lower. We're down by 12 basis points. The 10-year now back to 450. The single name price action is pretty crazy out there this morning. Nvidia's down by more than 10%. Losses for the likes of Microsoft and Meta. I mentioned some of the utility names. Utilities were up by close to 20% on the S&P last year. Just bear that in mind when you look at the likes of Siemens Energy over in Europe, down by something like 20%.
This challenges the entire theory that a lot of people have been talking about with artificial intelligence, where you would need that much more energy and that essentially you need to keep buying chips until the cows come home. And essentially you don't need to buy that many chips, according to this new rubric, and you don't need that much energy. This raises a question about whether chip exports have just made China truly more innovative to do more with less. And that is really what people are grappling with this morning.
Rob Casey of Signum Global Advisors alongside us. So, Rob, I'm going to bring you into the conversation a little bit earlier than I typically would. And we're not going to start on tariffs. We're going to start on this. How spooked do you think Washington, D.C. will be, given what maybe is coming out of China in the past week?
Well, I think pretty spooked, right? I mean, the concern has always been that as we send chips over to China, they will outcompete us. The Biden administration has put on a lot of different chip export restrictions, right? We saw that towards the last week, the last couple of days of Biden's administration. The Trump administration hasn't pulled any of that off. I expect they'll keep it on. They may add to it.
They may add to it. It's been a week already. Trump's in office. Do you think Biden was too slow? Or did this last administration drag their feet when it came to combating China?
Well, I think, I mean, honestly, the truth of the matter is, if we're looking at D.C. to be really quick when it comes to tech, right, when it comes to innovation, if it comes to AI, chips, I mean, frankly, social media, if we're looking for them to be really fast, I'm not sure that they've ever really followed through on that promise, right? The issue, the bug, or maybe the benefit of democracy is it just moves really, really slowly.
The fact that we have this now, and we know that Trump likes to use tariffs as a threat, potentially, he said, we could get tariffs as soon as February 1st. That's this weekend. Does a story like this make that situation more likely?
Well, we'll have to see how Donald Trump responds to the news around DeepSeek, et cetera. Do I think that it makes tariffs more likely on China? Perhaps at the margins, yes. But when it comes to February 1st, we're really looking more closely at the tariffs on Mexico and Canada. Honestly, I'm not expecting tariffs on China on February 1st, because the bottom line is, as we've seen really since and before the inauguration, Trump wants to at least speak with Xi, right? The odds of them getting to a Mar-a-Lago Accord, Trump deal 2.0, maybe not, but he wants to give it a chance.
Bear with me, and we're going to get to Canada and we're going to get to Mexico, because those things are important, and of course Colombia, which we would be talking about. But this reminds me of The Mask of the Red Death, which is a great story by Edgar Allan Poe. People should read it if they haven't. This idea of a group of people trying to keep things out, and it comes in anyway. And it raises this question about the open source nature of DeepSeek, and the idea that maybe keeping something a secret right now when things are developing this quickly is not the most effective way to do things. How much is that changing the discussion around isolationism in politics?
I don't think it's going to change the discussion in the Republican Party and in the Trump administration in particular. I think DeepSeek and China more generally is a threat to the United States, right? China is a competitor and not a collaborator when it comes to, frankly, it was Trump 1.0 that really defined that agenda. Biden saw it through, and Trump will continue to. So I don't think that this news is all of a sudden going to make Donald Trump a free trader, right? I think we will still be talking about tariffs and sanctions and restrictions, from here into the next 4 years.
Okay, so we could talk about tariffs and restrictions in Mexico and Canada. So I want to start talking about what the signal is from Colombia. This idea that initially they were shipping immigrants from the United States to Colombia, deportations, and then one of the military planes was stopped, and Donald Trump said, we're going to put 25% tariffs on you unless you open up. They open up and the tariffs are removed. Does this indicate that tariffs are a negotiating tool, or does this indicate that they are for real? Which is it?
Well, I think both is the short answer. We've talked here about our view, and it's really Andrew Bishop's view, our head of research at Signum, that there will be some tariffs that are ideological, right? When we're talking about decoupling from China in key sectors, when we're talking about punishing Europe and maybe even punishing Canada, those are ideological tariffs. They're not going to come off before they're even put on. But everything else, I think, the tariffs are meant for negotiation, right? Donald Trump sees tariffs, as a way to enact pain, as a way to raise revenue, and as a way to negotiate. Now, are all of those things, mutually exclusive? Maybe to a certain extent. But I think outside of China, outside of Europe, and maybe outside of Canada, which we can get to, I think tariffs are aimed at negotiation, right? But it's those ideological ones that I would be most concerned about, because when they're promised and when they're put on, they're not coming off.
Look, when it comes to Mexico, I think we can all understand what's going on here. There's an issue over the southern border. That applies to a lot of Latin America as well, particularly Central America. When it comes to China, reciprocity, national security, I understand all of that. With the Europeans, there's been questions about the protectionism of the European bloc for decades. But when it comes to Canada, I'm confused. I was confused last week. I asked plenty of people questions about this. I'm still confused. Can you make sense of it for us?
Well, I'm not sure I can make sense of it, but I can give you a couple of theories. The first is, right, that Justin Trudeau and his Liberal government are down, right? So if you're Donald Trump, maybe kicking them when they're down is reason enough to apply to a 25% tariff. Honestly, 25% would be pretty painful. That doesn't really pass muster for me as the exclusive reason. The second is this. There are a number of trade disputes that are outstanding, right? If we're talking about softwood, if we're talking about access to the Canadian dairy market, right? It's a similar situation, U.S.-Canada and U.S.-Europe, and that is the trade relationship. Even though the defense relationship is incredibly collaborative and positive, the trade relationship is not always positive, right? And it's not always neutral. Sometimes it is negative. And under USMCA, frankly, Canada has won more than it has lost when it comes to trade disputes with the U.S. And that leads me to the final point, which is we've done some looking at the timeline around USMCA revision and potential renewal. And honestly, our thinking at this point is that these tariffs may be an opportunity or given a desire to pull forward USMCA review by it would be earlier than it should be by about 6 months.
Don't you think Canada has a lot of leverage here? If you strip out energy, you've got the US running a trade surplus with Canada. If you include energy, which America needs to include because there's a type of crude that comes out of Canada that the refiners need, this is something that ultimately Canada has over the United States right now, isn't it? Isn't this a real position of leverage? I can't say the same thing for other nations at this point, but for Canada, don't they have some leverage?
Totally, 100%. And I think energy, in particular crude oil, is the best leverage that they have. It's one of the reasons that we expect, should we see tariffs on Canada, they will exclude, crude oil, so, and additionally maybe some electricity. So, I mean, then we're talking about a 25% tariff, universal, except for the most important import, right? And maybe it's a 10% tariff, universal, except for the most important import. So the bottom line is, it's true that these tariffs may have, less bite than bark, but we do think that Canada is in the crosshairs. And I'll just say one thing, in relation to Mexico, right? Donald Trump has made very specific demands when it comes to what he wants to see from the Sheinbaum administration to avoid tariffs. And I think the truth is that when it comes to Canada, there just aren't those same very explicit targets, right? That they can meet to, like, Petro and Colombia yesterday, to say, okay, we've accepted your demands, now please don't tariff us. For Canada, those demands are pretty vague.
But isn't Trump just in full-on negotiating mode? Because, as you said, Canada is on its back politically. He doesn't even really know who he's going to be negotiating a new USMCA with. So, in the end, he kind of has the upper hand at this moment.
Yeah, I think that's true. And honestly, it's a really good point as to the future of Canadian politics. And I'm not a Canadian politics expert, but we're going to get an election, right? And so I think that if we're going to add to the list of why might Trump tariff Canada, one of them is to ensure that the Liberal Party does not somehow make an extraordinary comeback and get reelected, right? So it could be Trump sort of putting his hand on the scales to ensure that he's negotiating with a more conservative, collaborator / competitor when the USMCA review does come up.
I guarantee we'll all be experts in the next few months. Rob, it's good to see you.
Good to
Rob
see you.
Casey there of Signum Global Advisors. If you are just joining us, a big shake-up in the equity market worldwide. On the S&P, we're negative by 2.4%. At one point this morning, the Nasdaq 100 was down by more than 5 full percentage points. Nvidia getting hammered.
It highlights two things. First of all, how much the entire American exceptionalism story has so far been leveraged off of the chip sector, in particular, one name, Nvidia, and some of the other big tech players. And then the second thing is how concentrated this equity gain really has been in just a few names at a time where we're going to get earnings and maybe some disruption.
If it's real, it threatens the whole ecosystem. Think about what we heard last week. U.S. dominance. Build out data centers. We need the energy. All of those stories just unraveling just a little bit. And I think it really captures the fact that this was all very one-sided. Everyone was on the one side of the boat. I don't know if this is real or not, but it doesn't take much to disrupt things when things are that one-sided.
When you actually look at what's behind DeepSeek, it's actually really elegant. And I think a lot of people are looking at this. That's the reason why Mark Anderson said this is the Sputnik moment. It's solving things in a different way. And that, I think, is what's getting people excited.
Up next on the programme, the latest with Bloomberg's Tom McKenzie as DeepSeek rattles global tech stocks. Live from New York, you're watching Bloomberg TV. This is quite a start to the trading week. On the S&P 500, down by 2.5%. Check out the Nasdaq 100, down by more than 4%. A Chinese AI lab, DeepSeek, demonstrating they can do more with less. Less of what? Less of Nvidia, apparently. We're down by more than 11%. Less energy, too, apparently. Siemens Energy down by something like 20%. Maybe less of everything. Over in Davos, Switzerland, guess what we were talking about last week? A lot of happy talk. Take a listen.
The dominant mood is extreme optimism.
This Davos is all Trump, all AI. If you're looking to take advantage of the United States through tariffs, which many countries do, you're in for a new rude awakening.
I wouldn't quite say a recession's around the corner, but it's not as many miles away as it was.
I got a little rattled when we were about to start because you said big event. We're coming up to a big event, and I thought it was our interview.
Shall I restart?
Yeah, let's restart.
Come back to
Okay,
T-shirt.
yeah.
All right, you ready? Live from Davos, Switzerland at the World Economic Forum, the big event. Ted Pick, the Morgan Stanley chairman and CEO.
Fantastic.
Good to see you,
guys.
sir.
I want to return to where we began, which is sports, and my sport, which is auctions. I'm looking at bond auctions, which I think is like a sport.
That's quite a term. Can I just say you looked the part when you walked in? You were so upbeat. I was said to you straight away, this is what the Gap CEO should be like.
Thank you.
What are you dressed in
live
today?
the brand. Today, it's pretty much Banana Republic. Top to toe. Underneath, we've got a little Gap and Old Navy.
Thank you, sir. Safe travels back to New York.
I'm an avid listener and watcher.
Well, we appreciate that.
You've got to come on again soon.
Lots of fun last week, lots of happy talk as well. Lots of happy talk from US executives, particularly from the bank executives. And the main standout, US dominance. And you compare and contrast last week with this morning, this is why you're seeing the moves we're seeing on the boards. We're questioning that US dominance.
Because it's been built on the backs of NVIDIA, on this sort of chip dominance and dominance in technological expertise. Is that being undermined by a development, DeepSeek, that's been known for a long time over in China? It's just that the US market is now waking up to it. I think that Steve Chiavarone was onto something when he said, actually, in these kinds of sell everything panic moments, that's when you want to start being a little bit more calm to understand exactly what's going on. Does that challenge disinflation? Does that challenge some of the efficiency that can come from other companies adapting AI more easily?
We'll take a deep breath around this table with the Nasdaq 100 down by more than 4%. If you are just joining us, welcome to the programme. Under surveillance this morning, Chinese AI startup DeepSeek demonstrating it can do more with less, raising questions over the future of America's tech dominance. Its latest AI model is seen as cost-effective and runs on less advanced chips, posing a challenge to US industry leaders such as NVIDIA.
So if you take a look at what it actually does, first, it basically is less specific because it thinks it can get the same result by being less specific for some of the inputs. And then it also, rather than using all of its experts at once, it uses specific experts that it only has light up when needed. It basically reduces some of the energy intensiveness and some of the chip necessity. If this is true and can be replicated in a real way, it undermines the model of NVIDIA winning all the time, every time, and some of these big tech giants having to invest as much as they have been.
And they did it without having access to the most advanced U.S. chips, because we've seen the export controls put on by the Biden administration, obviously kept. Trump's been in office for 1 week, kept by the Trump administration. So my big question this morning is, when he wakes up, an individual likes to check the markets and sees what's going on, what questions is he going to be asking the President of the United States, his policy advisors, on what they could do to make sure the U.S. stays dominant in this space? I feel like I have whiplash based off your conversations that you all had in Davos last week. U.S. exceptionalism, Stargate, all this money towards AI, deregulation, tax cuts. And then this morning, you have DeepSeek, a lot of concern over the weekend. And how is the U.S. going to combat all of this?
It's a big week for these kind of developments. If we go through the earnings calendar again, Microsoft, Meta and Tesla dropping on Wednesday, Thursday, Apple. Next week, you're going to hear from Alphabet and Amazon. End of the month, you'll hear from NVIDIA. Quite a time for them to come out and really try and justify why they're spending this much money at a time when we've just seen what's taken place over in China.
That's the exact right point. How much will they be penalized for some of their capital expenditures at a time where maybe it's not being viewed as necessary in the same way that a lot of people thought?
Check out the FX market last week. The euro just had its best week going back to 2023. The hopes and dreams of a lot of people in these markets is that the sitting president, Donald Trump, won't go forward with tariffs. Then the weekend happened. President Trump walking back tariff threats against Colombia. This coming after Trump announced an emergency 25% tariff on the country over a dispute about deported migrants. The White House saying Colombia had, quote, agreed to all of President Trump's terms without delay.
So the White House put out a statement yesterday and said, based on this agreement, because they are letting the migrants into the country, the fully drafted IEEPA tariffs and sanctions will be held in reserve. So they were never put on place. This was the threat. They draft them up. We didn't get any sort of signature from the president regarding sanctions or tariffs from the Treasury Department either. Unless Colombia fails to honor, the White House goes on, this agreement, then they will be put in place. The one thing that is put in place, though, is visa restrictions, which I think you can view this as a carrot and stick approach from this administration on how they're going to deal with a number of issues. But I was speaking to someone last night who said what you really need to take away from all of this is how concerned capitals around the world are just seeing this episode play out in the last 24 hours.
There isn't a lot of logic in terms of exactly where the tariffs will go or what they are for, because there are differences depending on the region in terms of why tariffs are being implemented. I just want to put this in the record. I don't get Canada. I mean, it's like our nice neighbor. Why beat up on them?
You and me both.
It seems like unnecessary. It's like the nice kind of nerdy kid who's always got your back, and you just kind of like beat up on them because it makes you look cool for the cool kids.
Well, Trump knows that he has to renegotiate USMCA by 2026. He's not just going to go at Mexico. He's going to get whatever he can out of both of them as he renegotiates this. And if you see, a lot of this also is the rhetoric. When he talks about Canada, one of the first things he talks about is fentanyl coming in from the northern border. And that was one of the biggest things he ran on, immigration and these concerns.
I think you can make the case, a much better case, that that's coming from the southern border than you can from the north. Also, the politics don't really make sense, the timing of this. There's a 20-point gap between the Liberal Party and the Conservative Party in the last polls that I looked at going into this election. Poilievre is going to take a very different approach to things like energy, perhaps in line with the energy needs of America over the next several years, assuming that Poilievre would win that election.
The only thing I can think of is that it's just posturing and that the blowback won't be that much because it's Canada and they'll understand if it's just a posturing figure. I otherwise cannot understand this, and I don't really get much insight from other people.
Yeah, you're not alone. I'm in the same bucket as well. Let's turn to this. The latest from the Middle East. Israel and Lebanon agreeing to extend their ceasefire until February 18th to give Israeli troops more time to withdraw. This coming as a dispute over a hostage held by Hamas was resolved with a deal to release another round of hostages on Thursday.
So it looks like this incoming administration wants to keep this deal in place that was done under the Biden administration. And I spoke to someone who said this really does feel like they're giving the new Lebanese president a chance to form a government without any fighting, something that we haven't seen in decades. The question is, after February 18th, does this hold? Israeli media is reporting that Steve Witkoff, the individual who got the Gaza deal over the finish line, will be going to Israel. Potentially we'll see updates about this through the end of the week.
If you are just joining us, welcome to the programme. Big sell-off worldwide in global equity markets. US tech stocks leading the way after Chinese AI firm DeepSeek released an update to its chatbot demonstrating similar abilities to industry leaders like ChatGPT at a fraction of the cost, raising major questions over the future of US tech dominance. Tom McKenzie of Bloomberg joins us now for more. Tom, welcome to the programme, sir. For people who weren't aware of the big unveiling through last week and the buzz over the weekend, and they wake up to this morning, just explain to them exactly what is DeepSeek.
Yeah, so this is a company that dropped this model on January the 20th. Look, they've been running since 2023 as a research lab funded and spun off from a hedge fund in Hangzhou, which is the innovative hub and one of the innovative hubs in China. They dropped the model, the R1, the most recent model, on January the 20th. If you take them at face value, they spent about $6 million trading it. It took about 2 months. And that goes to the point that you guys were discussing earlier, in that this raises a question about the cost, because it has the same capabilities, again, according to many metrics, as OpenAI, Meta and Anthropic. The cost, the pricing, the energy, and the need for compute. And that is the question mark. Those are the question marks that are being raised by DeepSeek. And it is already being built on and tested by the tech community in Silicon Valley because they license this out. It can be deployed very quickly. It is open source, so they're able to see the data and the way that they've constructed this and able to tweak it as well. So there's question marks about what goes into building these models into the future and whether it becomes commoditized. But when Andreessen Horowitz turns around and says this is a Sputnik moment for AI, I think you have to take that very seriously. And clearly the markets are doing that today.
Tom, we've been talking all the morning. Is this real? Is there more money that's going behind this? Is there something about this that we cannot see that sort of undermines the premise that everything that some of the big tech giants have been doing, they could do with a lot less money and energy? Is there anything that you could see that really gives credence to some of those questions?
So we don't know what chips they are using. We don't know what types of AI accelerators or GPUs. We have to make the assumption they're not using the most sophisticated NVIDIA chips, the Blackwell chips, because of the restrictions that are in place. JPMorgan raises a point in one of their analyst notes. They have a 50,000 cluster, the hedge fund does, that is funding this research and lab of DeepSeek. Did they use some of that cluster? That's a question mark. What chips make up that cluster? What chips make up the cluster that underpins DeepSeek? These questions we still don't have answers to. So I think it's valid to scrutinize and question what DeepSeek is telling us. But at face value, you have to assume that this could change that equation in terms of the need and the spend that companies like Meta are committing to, $65 billion through this year, $80 billion for Microsoft, not to mention, of course, the partnering and spend and investment around the energy piece of this, because this is an efficient model, if you take them at face value, and the price points, on some analysts' notes, about 5%, the pricing, about 5% of the OpenAI pricing. And that's why you could actually see very rapid deployment. It doesn't change the innovation story. It doesn't change the adoption story for AI. But it does, of course, pose a question for the builders of the models like Meta specifically and OpenAI, and the companies that feed into the supply chain, ASML here in Europe and NVIDIA, of course. But if you're buying AI, this could be good news.
It also raises this question about the idea of trying to keep models proprietary when you're trying to develop large language models. This idea that maybe open sourced is a better, more efficient way to create the most advanced ecosystem. How much is that alone changing the conversation in tech communities and, frankly, even government communities?
And that specifically is a question for Meta as well, because, of course, they lent into that OpenAI open source proposition because they want to drive down the cost of open source, but raise the margin that they're able to get from the apps that are built on top of those models. They want to squeeze out OpenAI and squeeze out Anthropic. The fact that DeepSeek seems to have taken open source code and built on it, as well as taking hardware, presumably from NVIDIA, and use that to incorporate into the build around their models, that will raise a question mark. So will this Trump administration look to the playbook of the Biden administration when it responded to Huawei building a chip that exceeded expectations, certainly the expectations of those sitting in Washington? Will the Trump administration look to that playbook and look at additional restrictions? Restrictions, of course, already in place for hardware and software. How far do they go in terms of trying to carve out space where China is unable to get both the software and hardware that has driven this development?
I'm sure a lot of those policy proposals are being drawn up, Tom. When it comes to this idea, though, of China versus the U.S., when it comes to a tech Cold War, how much does this challenge the notion that China is years behind the United States?
Well, on the reading of Andreessen Horowitz and others who have looked at this model, who have stress tested it, I've downloaded it on my phone, I have a play around with it. You can see the reasoning go through each step, step by step. You can pose questions about Tiananmen Square and Xi Jinping, you get nothing. Not a big surprise there. But what it reminds us is that China is able to innovate and iterate on the back of Western technology. Whether they've done that with TikTok, we've had a reminder of that over recent months, haven't we? And the fact that that became a leading social media app, or electric vehicles here in Europe, and the challenge that poses to our industry, European industry. Now, when it comes to AI and the models, it's a reminder China has the skills, they have the engineers, particularly the systems engineers, they have the data, they have far more data than anyone else, and they're able to build and iterate and innovate on Western technology. And that is a catch-up that many had not predicted in the AI space, that they come to this point so quickly.
Certainly on display over the last week. Great work as always, Tom. Thank you, sir. Tom McKenzie there of Bloomberg. Out of the city of London, NVIDIA is down by more than 11% in the pre-market.
It also points to the fact that valuations got very elevated and that a lot of people placed their bets on this story and imagined multiples that were incredibly high. That might be the biggest takeaway of all from this event.
It's a wake-up call at a time where things were very one-sided going into the last week. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. U.S. Steel is doubling down on its confidence in the Nippon Steel deal, saying that the interests of activist investor Ancora Holdings are not aligned with the company. Ancora Holdings is pushing the company to abandon the Nippon Steel deal and nominated 9 candidates for the board. People familiar with the matter tell Bloomberg that Ancora will push U.S. Steel to end litigation to rescue it and instead collect a $565 million breakup fee. Bloomberg has also learned that Elon Musk has initiated conversations about using blockchain tech at the new Department of Government Efficiency. According to sources, the Tesla CEO has mused about the idea of a digital ledger as a way to track federal spending, secure data, make payments, and even manage buildings. COVID-19 likely originated from a lab leak rather than a natural source, according to the CIA. The agency now aligns with the FBI and Department of Energy, which all said the virus probably leaked from a lab in Wuhan in central China. The announcement came after President Trump's new CIA director, John Ratcliffe, declassified existing information. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next, a resilient labour market.
The U.S. labor market has been the most resilient labor market in the world. No question, hands down, most resilient. Growth is going to create demand, and demand is going to create demand for talent, and then we're going to be back to a tight labor market.
Lots of data through the week and a Federal Reserve decision too, which we've hardly talked about. That conversation up next. Major moves worldwide. Let's check out the cross-asset board first. So equities declined. We're down across the board. Equity futures on the S&P off by 2.3%. Much bigger moves lower on the Nasdaq 100. That pushes a bid into the bond market. Yields down by 11 basis points on a 10-year in America. We're back down to about 4.51. As for the single names, Nvidia lower by 11.6%. Meta, some of the big spenders out there, down by close to 4%. And then, Lisa, the utility providers. Keep going back to this. Utilities last year on the S&P up by 20%. Just one energy name out of Europe today over in Germany listed on the DAX. Siemens Energy, down by 20%.
Two things. Number one, this highlights just how far some of this narrative has gone about AI and all of the ways that it would be deployed, which I think is really interesting and I think is going to have lasting legs regardless of what happens in terms of exactly how much this can be replicated, the Chinese model that we've been talking about. And then two, it really focuses on maybe people getting a little over their skis with the idea that the Fed would be hiking rates indefinitely and inflation would never come down. And that's also shifted this morning.
A Federal Reserve decision just around the corner alongside some economic data through the week as well. Under surveillance elsewhere this morning, a resilient labour market.
The U.S. labor market has been the most resilient labor market in the world. No question, hands down, most resilient. We've held unemployment fairly steady, workforce participation fairly steady, and we haven't overheated at numbers that traditional economists would say would be overheating. Growth is going to create demand, and demand is going to create demand for talent, and then we're going to be back to a tight labor market. So I would say the tone is more optimistic.
So here's the latest. A strong U.S. labour market and sticky inflation raising bets the Federal Reserve will keep rates on hold this Wednesday. Fed Chair Jay Powell also set to give his first news conference since Trump's inauguration. Nela Richardson of ADP joins us around the table. Nela, it's good to see you back from Davos.
It's great to see you as
Welcome to the studio. Huge moves worldwide in financial markets, and I think a lot of people assuming that Wednesday could be a non-event for Chairman Powell. Do you share that view?
No, I don't. I think what the Fed is signaling on Wednesday is super important for the rest of the year. Borrowing costs, remember, for consumers are still quite high. They're still at record highs. So even though we've seen these Fed rate cuts take root and really influence Wall Street moves, it hasn't translated yet to Main Street. And that's what Main Street is waiting for. That'll keep the labor market lifted and relevant in 2025 as a key component of U.S. growth.
So what do we expect to hear from them, other than we don't get involved in politics and we're on hold for now?
Well, you're going to hear that.
Okay, but I'm just wondering, like, what are we actually going to learn from them?
I think there is going to be a nuance to those comments because they are going to try and signal future paths. And they're going to try to tip their hand because they want to engage with Wall Street, with the stakeholders and the American public of what's next for the Federal Reserve. So there's going to be some confidence on the future direction of the economy. Remember, economic growth is a huge part of their, overall context and objective. And then there's going to be some thoughts on the future direction of the labor market and inflation. Those are their two key mandates. So you'll get more than we're pausing for now. Come back after the commercial break. I think you'll get more than that, but you're not going to probably get a definitive rate path for 2025.
When I was caught up in the hysteria of DeepSeek this morning and this idea of the market move, it raised this question in my mind of the relevance of the Fed, of even government policies that seem so far removed from some of these sea changes that are happening in technology that could very much disrupt the labor market. Do you see a quicker adoption of AI completely changing the labor dynamic in a way that the Fed cannot extrapolate out based on current information?
Well, AI is just one of two megatrends I'm watching. I do think it has the potential to change how we work. Not necessarily the jobs themselves, but how the jobs are executed, with a lot of our tasks being automated. What does that leave room for in your day? But also there's this other megatrend no one's talking about, which is age. And the fact that the U.S. workforce is rapidly aging, with 10,000 Americans, 10,000 U.S. workers turning 65 every single day. That's 4 million hitting retirement age every year. And that means that employment growth is going to slow down significantly over the last decade, like a fraction of what it was the previous decade. So you take generative AI and AI advances and you match it with a rapidly aging workforce where skills and domain knowledge are walking out the door every single day. And what do you have left? Well, that's certainly structural change that the Fed will eventually have to confront. But right now, they're in the here and now trying to get to that 2% target.
It's not just the United States that's facing these demographic changes, though. There's a ton of countries that are dealing with much older generation, and actually they don't have population growth that they normally would see. So is AI and technology actually matching the moment then for what the labor force requires?
Well, you think about how an economy would change with more older workers. It would reorient to healthcare. And where we haven't seen these huge advances is something simple like the care economy, what it takes to be a caregiver. I mean, that's a human occupation. But you've seen today, in the December jobs report, a huge increase in hiring in healthcare. So yeah, there is some disconnect between where the labor market is now and where the tech advances are coming. And I think over the next few years, you'll see them merge.
I'd love to get back to the Fed this week because this administration basically was brought into power for one major reason. That part of that was inflation. And at the same time, we see this idea of tariffs being whipsawed, something that the Fed maybe we'll be on wait and see to see what the policy is going to be, but inflation expectations are still high. Mm-hmm. So at some point, are they going to have to do more to combat those expectations everyday consumers have?
I think you make a really important point that is often missed. We're so focused on hitting that 2% target, and we're not as focused as anchoring to 2%. Those are that's a degree stronger than just hitting a 2% target. Now, what gives me comfort is the Fed has 400 PhD economists whose job it is to run these scenarios. And they do it with, they've been doing it for decades. So I think this is not outside of the Fed's capacity to run scenario analysis about policy changes. But yeah, they're going to have to be watchful of where the consumer is and where policy is going, for
Nela,
sure.
Always love hearing from you. Appreciate it. Thank you. Nela Richardson there of ADP. Going into this week's Federal Reserve decision and the economic data as well, I have no doubt that if this move continues, Chairman Powell will be asked about it on Wednesday. Perceptions of wealth in America can hinge on many things. I'll give you two. House prices of one. The S&P 500 or the Dow is another.
Does it give him more room to actually express confidence that the Fed can cut again this year, which will actually remove some of the political pressure from him? That's my question. How much that edifies and leans into some of the rally that you've seen at the front end of the yield curve at a time where the likes of Mark Seidner over at PIMCO are saying, look, the Fed's going to cut anyway because inflation's coming down.
Last week, the President of the United States says he's got things to say on the Federal Reserve, and if he disagrees, he will come out and say so. So we're going to hear that on Wednesday after the press conference.
Yeah, I'm sure he will come out and say they should have cut by 50 basis points. This real estate market needs to get revived. And by the way, rates should be lower and inflation needs to come down. Oil prices.
He says he knows better. He says he knows better, he thinks, than him, but didn't actually say him. But it was Chair Powell.
If he can engineer the kind of energy prices he'd like to engineer, it could lead to lower interest rates. That kind of makes sense.
Sort of. That wasn't really where the inflation came from, though. I mean, over the past couple of years, it wasn't an oil shock. I mean, there's lots of questions.
Sure,
but,
not just that.
But yeah, sure, yeah. But, if you engineer things.
Energy shock was certainly part of the story over in Europe.
Yes,
that's for sure.
Absolutely.
In the next hour on Bloomberg Surveillance, we'll catch up with Seema Shah of Principal Asset Management. We'll speak to Henrietta Treyz of Veda Partners, Mandeep Singh of Bloomberg Intelligence, Jim Bianco of Bianco Research. The second hour of Bloomberg Surveillance, next.
having Donald Trump come into office is a very welcome change and let market forces drive.
I'm optimistic on a lot of policies that are coming together.
When you have a messaging from the top in the United States around pro-business, that causes investment.
The pro-growth agenda is going to be something that's front and center.
I think we're going to ultimately have to see what the year brings because there's still more unknowns than knowns in the equation at this point.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Check out these moves to start Monday morning. Equity futures down across the board. We're down 2.35% on the S&P 500. Take a little look at the Nasdaq 100. If you're just tuning in, joining us, welcome to the program. About 90 minutes ago, that was down by 5%. We're now down by something like 4%. There's lots of whys. Here's a single name, Nvidia, getting absolutely hammered in the pre-market and down by close to 12%. The buzz over DeepSeek over the weekend, Lisa, absolutely overwhelming.
This is a Chinese startup that really began in 2023, was using chips that ostensibly had less computing power than the most advanced one by NVIDIA, and came up with a model that rivals OpenAI while using a much less expensive infrastructure, a lot less energy, and frankly, just as much accuracy. This is shaking up the model that so many people were looking at, that NVIDIA would benefit as everybody poured cash and energy into the build-out of chips.
We've already talked about this a few times this morning, of course. Blanket coverage into the opening bell from now. But to see Microsoft lower, Meta lower by 4 to 6%. These are the companies that are going to spend $50, $60 billion on capex this year. These are the companies that spent a lot of money over the previous 12 months. And here you are, a Chinese firm coming out and saying, we can do more or as much with a lot less.
And you made the great point earlier this morning where you were saying essentially how much does this raise the bar for some of these companies to show why they are spending as much as they are, with the likes of $65 billion from Meta expected to be announced this Wednesday. As we get these earnings announcements, will they be punished even more for their capital expenditures at a time where potentially it'll be proven not to be necessary?
These earnings calls, box office now, over the last week in a big way. Everyone's tuning into that. This Wednesday, you'll hear from Microsoft, Meta, Tesla. Over the next week, you'll hear from Apple on Thursday. Then to next week, Google, Amazon, and Nvidia at the end of the month. These are going to be big, big earnings reports for these companies.
And what are they going to say? We're throwing more money at it? Does that matter? We have access to the better advanced chips. Does that matter? What you see from DeepSeek is that they were able to make something pretty incredible without this access to advanced U.S. semiconductors. The founder said in an interview last year, funding's not the problem. The access to this money is. I think it's interesting what this associate professor has to say at the University of Technology, Sydney. This younger generation also embodies a sense of patriotism, particularly as they navigate U.S. restrictions and choke points in critical hardware and software technologies. You have to think they did this with the walls being up. What can they do if they even had more access?
There's a large takeaway here, regardless of exactly how this shakes out. And right now, we're talking about sea change. The world is over. The world has changed. We're going to have a different narrative from here on out.
Your favorite subject, isn't
100%. You know, basically Armageddon. Let's ring the bell. But before you go there, I think that there is another takeaway, which is basically how much this market got lopsided in one narrative.
Yeah.
And this, to me, really is a gut check on how much that can really be quickly shifted at a time when we knew about DeepSeek, or people in China knew about DeepSeek months ago. So there is a larger takeaway here that I think is instructive for the market.
I agree with you, and just to build on that, just to reiterate it, I think that's really important. When you see moves like this, you have to talk about where you have been over the past few years. It's not just about the magnitude of the breakthrough in China, it's also about the magnitude of the move here stateside and how one-sided expectations had become. Our ability, our capacity to absorb negative news, this is something that Lori Calvasina raised over at RBC coming into the new year, greatly reduced by the fact that these valuations were so elevated into 25.
And it was led by the tech stocks. We saw that even last week with another record high for the S&P 500. Why? Because of the tech stocks led by NVIDIA could do no wrong. When you have technology that's moving so quickly, there were even people who study neural nets and some of the LLMs, large language models, talk about how we don't fully understand what the implications will be. To put all your chips in one basket, so to speak, and talk about elevated valuations into the future becomes a much dicier proposition. And I think that's the gut check.
Lisa, do we need to rethink the whole thesis now? The CapEx narrative, the story of last week. We're in Davos, Switzerland. Everyone's talking about data centers, energy needs, utilities last year rallied by close to 20%. I keep talking about this one name over in Europe. Siemens Energy down by 21%. over on the DAX?
Well, I don't know, but I do think that there is this large question, and there had been a large question about whether AI could be deployed with the infrastructure that we had, and the answer was no in its current form. The only way to get it to have the efficiency that people needed was to completely change this construct where they used a lot less energy. So ostensibly, you still need some of those energy sources, you still need some of those data centers, but you just get a much faster adoption, which actually is beneficial for a larger range of companies.
A lot of comments already this morning, prefaced with, if it's real, if it's real. Mizuho asking those questions themselves. Is it a synthetic scare? Were costs subsidized by the state? How much power was actually used, and did it come from elsewhere? All of these different things we need to work out.
I think there'll be a ton of questions in this gray area because it's coming out of China, and because they didn't have access to these advanced chips. How exactly did they do this? Also, I think it is very interesting. Where did the funding come from? Is this something that the CCP is backing? And if so, what else are they backing that maybe we actually don't have all the details behind?
Coming up this hour, plenty of commentary on all of this. Seema Shah of Principal Asset Management as stocks retreat from all-time highs. Henrietta Treyz of Veda Partners as President Donald Trump reiterates a key tax pledge. And Mandeep Singh of Bloomberg Intelligence as China's AI startup DeepSeek slams tech stocks. We begin this hour with global stocks very much under pressure. Investors rattled as China's AI startup DeepSeek threatens US tech dominance, leading to questions over Mag 7 valuations. Seema Shah of Principal Asset Management has been saying the following. While the secular trend upward of the Mag 7 should persist over the long run, their expensive valuations coupled with elevated bond yields imply that investors should pay increased attention to stocks trading at more attractive valuations. Seema joins us now for more. Seema, welcome to the programme. Of course, you wrote that before the news over the last week. How much does the news over the last week change your thesis for 2025?
Hi, John. Well, look, as you said before, there are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. But, you know, as we said, valuations are really extended. So coming into this year, there were already going to be vulnerabilities. Now, I don't think anyone quite saw this coming, but it really does accentuate that that need for diversification and looking at things with lesser valuations. But, you know, we came into 2025, and I think across the board, outlooks, the theme was US exceptionalism. We're at the end of January, or not even at the end of January, and a lot of this has the potential of already being rewritten for 2025. So I think a lot of uncertainty adding to all the tariff uncertainty, inflation uncertainty that investors were already dealing with. It certainly looks like a fairly tough year for investors.
Seema, just to follow up, this is a question that Lisa raised on the programme a little bit earlier. Given what we know, and we know a fair bit over the last week, not enough, but a fair bit, do you think it is sufficient to undermine US exceptionalism, US tech dominance?
Well, I think what it does is it does really put bigger question marks around those valuations, because it reminds investors that these companies are not completely immune. It's not like they're never going to have competitors. There will be competition. So there has to be question marks around how much is being spent on chips. Companies like NVIDIA, what is going on with their future? You know, can this really be sustained? And is demand going to be kept? So I think there has to be question marks. I think there's a longer term story where US exceptionalism can persist, probably not to such a significant degree, just because of innovation, the system. You know, you have an administration coming in now who is very much focused on that growth, ensuring that the US keeps its stage. So I think you can't answer that today, but I think investors have to wake up today and say, well, look, maybe we just don't look at the US, and global diversification has to be even more prominent in portfolios than they were just a week ago.
I love how when the market is flying high, we have a million investors who come on and they say any dip will be a buying opportunity. And then there is a true bona fide dip and people say, well, this makes us rethink everything. Seema, is this one of those moments where it's a buyable dip, or does it make you rethink everything?
But it's a good question, because I think, you know, we've been, like everyone else, we've been looking at money market funds and wondering why are people not deploying? And the answer that keeps coming back is that they've been looking at valuations and they're just not sure. They want to get into the big tech, but they just don't like this price. Now today, or even in a few days' time, when tech maybe comes down even further, investors are going to get back in at that point. I think there's going to be question marks. I think they're not going to jump back into the market until they have real answers. And if anything, this week, what investors should be doing is looking at what are the other sectors, what are the things that can benefit from the overall gain in productivity that DeepSeek probably offers outside of those Mag 7. So I think a lot of question marks. I wouldn't say that this is a buying opportunity for these big tech companies today.
Seema, that is exactly where I wanted to go. How much does this actually point people toward the direction of where AI can actually be deployed? Are there particular areas that you're looking at that are the quickest and cleanest beneficiaries of this type of efficiency?
Yeah, I think like everyone else, we've been doing all the homework into the various sectors. The two that really have stood out to us are healthcare and agriculture, the clear benefits that they can gain. So I think that story is still very much in motion. If anything, it's probably been amplified by today's news or the last week's news. So I don't think there's question marks around those. It's really about those specific companies that have really benefited from this drive up, thinking about all the infrastructure that will be necessary to drive the kind of AI that we've been seeing. So I think that's where the question marks are, but I think it does mean some pretty good news for other sectors around the world.
Is this a moment that you would actually want to have more exposure to the Chinese equity market?
It's such a good question. I think everyone's going to be wondering that today. Did we make a mistake by not increasing exposure? I think there's too many question marks still. There's still a lot of concerns around the fundamental story. Are company or investors willing to go all in into one trade, just like they did with the US with the Mag 7, into a new company or one or two companies in China? So that one-sided bet just shifting, or are you going to look at the whole ecosystem within China and say, look, there are still some deep-rooted fundamental problems that investors have to consider. So it's global diversification. I don't think it specifically means China. It's looking at what are the other companies, what are the other countries that may be a little bit less vulnerable potentially to what's emerging today.
Seema, you mentioned earlier the U.S. is going to make sure they maintain their tech dominance. We have seen just in the first week, so I don't know if it's a real barometer, but just in the first week, President Donald Trump has really taken aim on Canada, on Mexico, on Colombia, and he's held off on China. Do you think something like this will push the administration to ratchet up the pressure on Beijing?
I have to imagine that the administration is going to try and do their homework and try and figure out how much of a threat this really is before they jump headfirst into making some additional threats. But look, the news over the past week, just because they hadn't moved forward with China or Europe for that matter, doesn't mean that tariffs were never going to come. I think we were just thinking about what is the timing and how drastic could they be. If this really does prove to be something very meaningful, then yes, I'd expect that maybe tariffs on China could be greater. The US has even more of a reason to try and rein in their strength. I certainly don't think that it's something that they're going to jump into so that tomorrow you start to see headlines.
Just to wrap this all together, Seema, do you think that the Fed has ever been less relevant on a week where we're going to be hearing from Meta, Microsoft, and Tesla on the same day as the Fed rate decision?
I think that coming into this week, the Fed was already somewhat irrelevant because I think everyone knows that they're not going to cut rates this week. Having said that, yeah, I mean, look, this isn't going to be the headline news. No, I mean, even on the Bloomberg terminal, I struggled to see anything on the Fed for this morning. But look, this could be key because I think just want to say one thing on this. We have been very much, I think, reassured that US consumers' household balance sheets are very, very resilient because net worth has increased so significantly. But we can't ignore the fact that net worth in the US has been driven higher significantly because of equity market exposure. So any kind of concerns of equity markets does unfortunately feed through to the US economy. So I think that is something that we're not going to hear about from the Fed this week, but it's something that they have to be watching, tracking very, very carefully over the coming months.
Seema, appreciate your input as always. Seema Shah there of Principal Asset Management. Off the back of the sell-off this morning, so far this morning, equity futures down across the board. Nvidia getting hammered. Cantor Fitzgerald putting this out this morning. Cantor would buy Nvidia on weakness, saying the following, that despite concerns about what this could mean for demand, quote, the announcement is actually very bullish, with AGI seemingly closer to reality and Jevons paradox almost certainly leading to the AI industry wanting more compute and not less. And I believe it's Jevons and not Jevons, Jevons paradox. Is it? Danny Berger writes in to explain what all that is. Efficiency increases demand, not decreases it. You saw that in the Industrial Revolution. You saw that when Japan made more energy-efficient cars.
Well, if you can basically expedite the adoption, you could increase demand across a wider swath of potential firms. So maybe it won't be the Metas and the Microsofts buying all the chips. It'll be, United Health or some of these other companies that are deploying it in other ways. Again, a lot of unknown. We don't know necessarily how much actual investment went into this, what chips they actually were using. We don't know how applicable this will be. Nonetheless, it counteracts some of the the dominant narrative that we've had over the past couple of months that really has driven a lot of the concentration of returns in Nvidia.
Let's get you an update on stories elsewhere this morning. Are there any stories elsewhere? Thank you, Danny Berger. Appreciate the explanation.
Well, funny you should say that. A big day for Jevons Paradox. And I kind of want to start there, just giving you a roundup again of the deep sell-off we're seeing. DeepSeek driving a global tech sell-off. You can see just how off we are in those various names. NVIDIA down 11.3%. It's a new model demonstrating performance similar to the world's top chatbot without the high price tag. It's built with open source tech and challenges the notion that China's AI tech is behind the U.S. There are stories elsewhere. One of them, AT&T beating fourth quarter earnings expectations, only up about 1%, but that was thanks to an increased mobile customer and fiber-based internet subscribers. Seasonal promotions and bundled product offerings drove the results. Revenue jumped 1% year over year. The communications giant reported 482,000 new monthly mobile subscribers and 307,000 new fiber optic internet customers. Elsewhere, Israel and Lebanon agreed to extend their ceasefire until February 18th to give Israeli troops more time to withdraw. This ceasefire deal between Israel and Hamas still holds after a dispute over hostages was resolved. Talks on the return of Lebanese prisoners and the release of more hostages are set to begin. And that's your brief. John.
Hey, Danny, thank you. Thanks for this morning. More from Danny in about 30 minutes' time. Up next, Henrietta Treyz of Veda Partners breaking down these big moves and what it could mean for the US-China relationship. That conversation just around the corner from New York City. This is Bloomberg. Equity futures down across the board. On the S&P, negative by 2.3%. On the Nasdaq 100, off-session lows. Look at that number. Believe it or not, off-session lows. We were down by something like 5% a few hours ago. The Nasdaq 100 down by 3.9. Plenty of messy single names in the pre-market, including NVIDIA, down by double digits through most of this morning. NVIDIA right now is down by 12% at the moment. Dan Ives of Wedbush pushing back, as you might expect him to. The bears have missed the historical rally in tech stocks the last 2 years and will miss the next 2 years, constantly waiting for the Black Swan event to end the AI revolution trade. From Fed moments, rumours of NVIDIA Blackwell delays, Tokyo Black Monday. Today's no different. These are just the opportunities to own NVIDIA, Microsoft, Alphabet, Palantir, Salesforce, Amazon, and the broader tech ecosystem.
This is not necessarily a challenge, though, to the AI revolution. This is a challenge to the phase of where we are in that revolution, whether we're moving from the chips to the application.
Also, Dan Ives says this: no U.S. global company is going to use a Chinese startup, DeepSeek, to launch their AI infrastructure. There is something to be said about the questions about this. Is it even real, DeepSeek? And also, do you want to rely solely on this Chinese startup when there's a ton of questions about everything that's coming out of China and potential bans they may face in the United States, like TikTok?
If it's real, it's very impressive. Under surveillance this morning, Chinese AI startup DeepSeek roiling global tech stocks and raising questions over America's tech dominance. Henrietta Treyz of Veda Partners joins us now for more. Henrietta, welcome to the program. Certainly not what we expected to be talking about. Looking back a week ago, looking out a week, but here we are. This one has really spooked equity markets worldwide. I imagine it might have spooked some people down in Washington, D.C. as well. Henrietta, what are you hearing?
Yeah, absolutely. I think all eyes are really on the attention to the Phase 1 trade agreement, which, as you know, was reached under Trump's first term in February of 2020 and had mostly an emphasis on agriculture purchases. All this tech stuff, forced tech transfer, intellectual property theft, all the components we're talking about now, including state subsidization, which is such a huge part of this story, is something that's not included in the Phase 1 deal. So I think the first issue when I think of D.C. and how they're prepared to respond here, especially since the Senate is dealing with nominations and the House is on recess, is what's going to happen from the administration's perspective. We know that they're re-engaging on the Phase 1 trade deal. I have no doubt in my mind that this is going to bolster their resolve to pull out of the Phase 1 trade deal as soon as USTR Greer is confirmed and completes his review of the deal that they reached in February 2020.
Last week, we had Trump come out and talk about $500 billion for this Stargate plan. What options do they have in the White House when they want to combat something like DeepSeek?
The White House is not where you see these kinds of investments in huge monetary inflows. Obviously, we have that one example that has been in the pipeline. But if you want massive subsidization on par with the Chips and Sciences Act or the Inflation Reduction Act in clean energy or these chips building Intel or Samsung manufacturing plants in the United States, you really need an active Congress, and we are months away from that. So the best the administration can do continues to be on the restrictive side, tariffs, export control restrictions, and things that we've seen throughout the Biden administration, and I expect will continue under Trump 2.0.
But if this is real, isn't this just an example that export controls don't work?
Yeah, absolutely, especially the open source component of this and the fact that it's so much cheaper. I mean, this has got to be a core concern of not just the Trump administration, but all the tech universe that has moved into the West Wing. Those are definitely areas where you'd expect to see them really try to gin up ideas and probably come under pressure from President Trump to gin up further ideas to advance this.
It also raises a question about H-1B visas, when if you want sort of an open source, you also want to be importing talent who has expertise in specific fields related to large language models and artificial intelligence. Henrietta, as we hear about all of the deportations, the roundups, et cetera, by ICE, how much is there discussion about reform and potentially amending some of the H-1B visas and other aspects that affect the U.S. workforce?
This is the perfect question, and it's sort of an open wound now in Republican circles. You have one wing of the Republican conference who wants to raise visa fees, make it more expensive for migrants to come over to the United States, for corporations to hire H-1B visa applicants, to restrict the numbers of H-1B visas that are even doled out across the pharmaceutical sector or the banking sector, the technology sector. And then you have another group that very much wants to expand this access. And that immigration fight is one that we're seeing play out in this broader conversation about reconciliation instructions. Republicans only have a chance to pass legislation this year. Going into 2026, you're not going to see legislation pass because we're going to be deep in the primary season and the general election of 2026. They have to do that this year. They're meeting in Doral this week on the House side to come to any kind of consensus they can here. I think the number one takeaway I have is that they need money, and therefore increased costs of bringing in high-skilled workers is almost guaranteed to be part of either the first reconciliation bill or the only reconciliation bill Republicans pass this year.
Henrietta, there are different warring camps within the Trump administration. We've talked a lot about that. You've got some of the big tech oligarchs that some people talk about on one side, and then you have some of the more populist members on the other. Do we have a sense of who's winning out so far?
Honestly, the deficit hawks are the ones that are winning out. I think it's a mistake to think about this in terms of just who in the White House is winning. Your real problem is the House Republican Conference, where you have little pockets of opposition to almost everything that's being proposed. So this grand thinking about who's going to win in the White House, I think misses that we have 18 members of the SALT caucus who won't vote for anything that doesn't hike salt by a material amount. 20K is no longer going to cut it. Then you have the 30 members or so that support all of the clean energy tax preferences in the Inflation Reduction Act. You have other members who want to expand the child tax credit and keep all the SALT revenue. So these sort of like high-end conversations about what is the future of the party are going to get lost the second we start writing the tax bill, which is starting really this week as they try to come up with what the budget resolution is going to look like. So I'd encourage investors to get even more granular than that.
Nothing easy about any of this. Henrietta, appreciate your time. That's Henrietta Treyz there of Veda Partners. The SALT lobby already causing some problems, right?
Oh, absolutely. I mean, but at the end of the day, they have all the leverage, because if you don't have a raise of the cap and TCJA goes away, then it becomes unlimited. But to the point she's making there, every single representative has become a king or queen. They can make any one issue or do or die issue. That is because the Republicans in the House have one of the slimmest majorities they have ever dealt with, and they're not in agreement on a vast majority of these issues.
The tax is not part of the story this morning, that's for sure. Equity futures down across the board, recovering just a touch here, Lisa. We're negative by 2.3%.
If they're haggling over SALT taxes, how do they talk about, revolutionary changes in AI and how to support that?
Much, much bigger issues.
Yeah, I'm just wondering.
They don't.
Yeah, that's part of the issue.
Up next on the programme, Mandeep Singh of Bloomberg Intelligence as worries over China AI startup DeepSeek sparks a global equity market sell-off. This probably wasn't the outperformance in small caps you were looking for. Certainly weren't looking for it to look like this. But you're getting that relative outperformance now because the major tech names are getting hammered. Manos will go through the names in just a moment. The Nasdaq is lower by 3.8%. as low as negative 5% earlier on in the session. With your morning movers, let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. Yeah, the Nasdaq was down 5% at 6 a.m. when you came to air and when I went off. What has DeepSeek done? It's really chipped away at the moat, that perception of a moat around NVIDIA. Every 1% lower in this stock is $35 billion worth of market cap. So you're looking at somewhere in the region of $380 billion worth of market cap wiped out. It's that impenetrable moat. Right now, what you're seeing is the risk is a lower cost option. So it's pervasive, not just within the chips that you use, the energy that you need. You've touched on all of these issues. Let's just take it forward and have a look at how that's permeating around. Meta, of course, they doubled down on Friday, didn't they? $65 billion in terms of CapEx. Will they need to do that? What's going to happen? They have, Danny and I were looking at this morning. They've set up 4 war rooms to understand what DeepSeek is doing. How this high flyer, let's say, is producing lower cost of training. Will Mark Zuckerberg put on a suit again? That's the question Danny asked this morning at 3 a.m. But it is about their Llama assistant. What is it going to mean for that? Microsoft comes in down 6% here, Jonathan. Again, they put $13 billion into OpenAI. $13 billion. Nobody's saying that that's a squandering waste of money at this stage, but the numbers are simple. If we can trust this DeepSeek, 97% less computing power at 50 times lower the price. Is that subsidized? Is that real? What's the veracity? There's lots of questions we can ask around that. But right now, you're questioning that $13 billion investment into Sam Altman and OpenAI. There you go. Jonathan, good morning.
Thank you, Manus. That stock gets hammered. We're down 6%. I think Meta's got to drop more than 3% before Mark Zuckerberg puts on a suit. How about you, Bramo?
Well, I don't know. I mean, he has his now necklace brand, so I think, that kind of carries him a long way before he gets that suit back on.
I don't think that's happening anytime soon. And the surveillance this morning, American tech exceptionalism put to the test as China's AI startup DeepSeek rattles global markets. Tech stocks leading the decline, on track for a $1.2 trillion market cap wipeout if losses hold. The Nasdaq down by 3.9%. The tech stocks over on the Stock 600 over in Europe getting hammered as well. ASML, the big victim there.
Because this is basically just putting an absolute wrench in the entire supply chain when it comes to semiconductors. Even if they are doing this off the less advanced chips, they are doing it off of open source AI as well. You might need not as many of these semiconductors as potentially everyone thought. All this investment going in, is it almost too much? Do you not need it? And this is going to be a big problem.
Yeah, it also shows that, frankly, people are looking for the next squirrel to come around to give them sort of a new narrative. And basically, everyone's been hinging their shingle on this one idea that everyone's just going to load up on chips, and the more the better. And this sort of undermines that.
You think this could just be a squirrel?
I don't think it could be a squirrel. I guess how much have people been chasing that squirrel to elevated valuations? The idea that this is all in, you can't spend enough on chips. Does this undermine that? And now we've got a new squirrel.
Jensen's been in China for a while, hasn't he? Makes a lot of sense why he was there and wasn't in Washington, D.C.
Yeah, I mean, it also raises a lot of policy questions. What is the appropriate regulation of some of these chips? How much is the competition shifting to China? How much is this actually is some technology that the U.S. can adapt? Or is this really going to stay in China?
Based on what we know so far, you can make the argument, I think this morning and others have, that it's led to greater efficiency out of China.
Well, out of China, that can be deployed in the U.S., which could potentially be beneficial for a number of sectors. Look, we're trying to figure out what the implications are of something that we've known about for a hot second, right? And there is this feeling that it is a revolutionary shift. Nonetheless, it is one that people have been expecting. So that, I think, is the more interesting takeaway, how disruptive it actually has been.
Let's turn to U.S. policy. President Donald Trump's tit-for-tat trade war with Colombia didn't last too long. Trump announcing sweeping tariffs on the South American nation over migrant deportations, then abruptly backing off as soon as Colombia agreed to accept deportees. Is this a model for the next year or so?
This must be one of the smallest or shortest trade wars we've seen so far. But what did happen is Trump was willing to just basically throw around the weight of the United States, and he got what he needed at the end of it, which is why I think a lot of other countries, say Canada, Mexico, maybe the European Union, are looking at this and saying, wow, this is what we have in store. Now, the sanctions, the tariffs did not come in place. But Caroline Leavitt, the press secretary, made very clear last night They're fully drafted, and she said they will, quote, be held in reserve.
February 1 is only just around the corner. It's not just about Colombia. It's about Mexico, Canada. It's about China too, and it could be about Europe as well. Taxes won't be straightforward either. President Donald Trump reiterating at a Las Vegas rally his campaign promise to eliminate tax on tips, telling the crowd, quote, if you're a restaurant worker, server, a valet, a bellhop, a bartender, one of my many caddies, or any other worker that relies on tipped income, your tips will be 100% yours.
So he says, let's see what Congress says. Henrietta Treyz just basically walked us through how difficult it's going to be even just to extend TCJA, what the SALT caucus wants. How difficult is it going to be to say something like there's going to be no tax on tips? And also, you have to start defining this. Who else can be paid in tips? Could one of your bonuses just be a tip now that you don't have to pay tax on? And also, what does this actually mean for the underlying economy? If you work at a grocery store and say you work at a cash register, but now your friend who's a waitress is not paying taxes on tip, does that mean there could be a shift in the economy on the jobs people want to go after? This has a lot of complications, and I'm not sure they're going to get it done this year.
Which, again, goes to the heart of why people are looking for squirrels. Because right now, the actual nuts and bolts are not very clear, and you can tie yourself into knots trying to understand exactly what will get through. It's not going to give any clarity, but it does seem like clarity that, oh my gosh, there's a revolution in AI. Let's talk about that. I think that's the reason why we're talking about squirrels.
Let's get back to that. Let's get back to that big squirrel. It's a big one. Let's turn back
just a squirrel.
to one of our top stories. Global tech stocks under pressure as China's AI startup DeepSeek continues to rattle markets. The Nasdaq now down by 3.8%. US chip giant Nvidia on track for its biggest market cap wipeout ever. It's down 12% currently as investors reassess the Western AI firms' valuations and competitiveness. Joining us now is Mandeep Singh of Bloomberg Intelligence. Mandeep, good morning, sir. It's good to see you. Yeah. This came from Jordan Rochester of Mizuho just moments ago. In short, it's hard to fade this as it puts into doubt the Nvidia story, the pricing power of US tech AI, which isn't cheap, and comes at a moment where consensus long US exceptionalism trades are looking very fragile. Mandeep, let's start with a simple one. Is this the real deal?
I mean, look, when it comes to open source, this is the moment. And we have had, Meta Llama as a model that's open source. Companies were adopting it, but it never was talked about in the same league as ChatGPT and Anthropic and, some of the other models, Google Gemini. In this case, what they have shown is not only is open source comparable in performance, it's far more cheaper. And that's where, you have to take that into account. I mean, OpenAI is charging, $200 a month for their O1 Pro model. How do you justify that cost now, given your open source model is almost comparable in performance?
Danny Berger raised this question a little bit earlier on in the programme. I'd love your view on it. Does that greater efficiency lead to greater demand or not? Because certainly this morning it looks like for NVIDIA, people have made their decision on which side of that argument to come down on. What side of the argument would you come down on?
I mean, it should lead to greater demand, and I'm in that camp. The problem with NVIDIA is the expectations are already so high that the stock will be driven by how much the estimates can be revised upward. And so when you have a moment like this where everyone is questioning the pricing of these chips, I mean, look, NVIDIA is the one that gets impacted the most because their gross margins obviously will get impacted in this case. So net, I think demand-wise, we should be good. I mean, a lot of this data center capacity is fungible. So even if they're not using for training, they could deploy it more for inferencing. But, Meta raised their CapEx last Friday. There was Project Stargate announcement. All this points towards more dollars going into generative AI. And so I don't think that, the DeepSeek model changes that, in terms of what companies are allocating their CapEx. Maybe you'll find out more during the earnings season, this week.
There's another element of this story, which is how did China get to this place? And a lot of people, so far, the narrative has been that they simply did more with less, that they got these chips that were restricted and that were less powerful, but they were more innovative. You kind of are challenging that thesis. What's your take on this?
Well, so when I look at Meta Llama as an open source model, it's been out there, Llama 3, Llama 4, they have open weights, in terms of the models, and that's the secret sauce. You talk to OpenAI, they don't want to open source that, Google Gemini. So the fact that you have one model which is comparable to all the others that's been open source, and everyone could use that model and then keep improving it. OpenAI talked about O1 model, being kind of driven by scaling around inferencing. Now, that's where what DeepSeek has done, is they have used the feedback from these models to improve the data that's being fed to their model. And the baseline was still the open source model, but they were able to improve the, the inner workings of the model, the next version of the model, based on the feedback. And that's where, they were quite creative in terms of using an open source model as a reference.
Just to sort of highlight your point, there has been a long-time cliche that the United States innovates, China replicates, and Europe regulates. Are you saying that this is more of that essentially the innovation came from the U.S. and that China took some of what it learned in the open-sourced models from Meta in particular and just built on that?
I mean, look, they were not the first movers. When it comes to the ChatGPT moment, it was OpenAI and, Anthropic. These two companies had the models first. Everyone else, Google obviously had their own in parallel. Everyone else has leveraged the open source model to an extent. And that's why, Meta's approach was, we want to create an ecosystem. That's why they open source it. I mean, the Chinese models, look, there are some nuances in terms of the paper that they have around this. And clearly, as I said, they've done a lot with the reinforcement learning, human feedback element. So they have done a lot around improving that open source performance and bringing down the price. That's the real innovation, is the hardware efficiency and lowering the inference price. I mean, the fact that OpenAI is charging so much higher, $200 a month for their latest model, and DeepSeek is saying we can do it at a fraction of the cost. So clearly, that hardware efficiency is a theme, but I would say the baseline was provided by the open sourcing, and then clearly they built on that.
And people I talk in Washington are concerned with China getting ahead of the United States. Will say things like, China's a year or two behind. What's the gap now?
Well, I mean, I think what this paper shows is they are more creative when it comes to, the less hardware that they have available, both on the training side and the inferencing side. And in terms of widespread deployment, I mean, you could argue, they have the local apps that leverage these models, and, it's a ChatGPT equivalent. But will it get broader adoption? I doubt, because of all the concerns that even TikTok had. But, it's still the #1 downloaded app here in the U.S.
Does this basically show, though, that export controls don't work?
I mean, we don't know the exact kind of training cluster that was used. Some people are saying it was $6 million and, 2,000 GPUs. But others are saying they had a lot more. So we don't know exactly. But the paper that they have given out clearly shows that when it comes to inferencing, their costs are far lower. And training is a one-time thing. Yes, you have to train your models every 3 months, 6 months, but inferencing is the bigger opportunity when it comes to deploying across, a family of apps to billions of users. So that's where I think lower pricing really helps adoption.
How much does this lift the bar for some of the tech giants that are going to be reporting earnings this week?
I mean, look, Microsoft, Google, like I said, Meta raised their CapEx. So what they have to tell the street now is, let's say this is real in terms of DeepSeek bringing down the price. How do they plan to compete on that in terms of using that innovation and incorporating it? And then really, what does it mean for 2026 and 2027 CapEx plans? Because we know this year they are raising the CapEx. I don't think they are walking that back. But then NVIDIA is driven by what happens in 2026 and 2027. And that's where I think there are still question marks.
So, Mandeep, can I just jump in? They might not walk it back. Will investors put the pressure on them to do just that?
Well, so I think compute capacity is quite fungible. So let's say for training, you don't need as many GPUs for the next version. So you can deploy that for inferencing, because there is a real demand for all the AI to be incorporated in current apps, current websites. So from that perspective, I do think they can say, okay, in the case of Microsoft, the cloud revenue will accelerate. Google cloud revenue will accelerate. Meta, I don't know, because they don't have a separate cloud business, but they can still show that in the ad monetization. So all these apps have, places where they can deploy AI.
Mandeep, appreciate your time, sir, as always. I have no doubt we'll be talking again before the week is out. Mandeep Singh there of Bloomberg Intelligence. This is something that we've been talking about for quite a while. The biggest risk, for the likes of NVIDIA, would be the biggest spenders on that company, their biggest clients, their investors losing patience with them, with the CapEx spend coming out of companies like Meta. And I imagine there'll be a lot of questions on the call about that in the next few days.
And I think that, to Mandeep's point, it's not necessarily for the CapEx spend this year. or next year. It's to look at where that CapEx is going to go at a time where you potentially could do more with less.
We've got some pushback from Dan Ives of Wedbush. He says the Bears dominated the weekend narrative and are trying to scare investors that this is a black swan moment. It's actually the opposite. It's bullish for hyperscalers, Nvidia, and use cases.
Essentially, the idea that it will actually increase and speed up the adoption of artificial intelligence and increase efficiencies across the economy. Again, that points to this question of the incredible outperformance of small caps this morning.
The Nasdaq is down by 4%. Some relative outperformance from the Russell. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. South Korean prosecutors have charged President Yoon with insurrection for his attempt to impose martial law last month. Yoon is the first sitting Korean president to be charged while in office and can be detained for up to 6 months while his case is reviewed. The indictment comes just before Yoon was due to be released from detention on Monday. Bitcoin sliding over the weekend and again this morning, down almost 5% after President Donald Trump created a working group to advise the White House on crypto policy last week. The drop also tied to the close correlation between crypto and other risk assets, which, as we know, have been selling off with that DeepSeek advancement. Bitcoin is still up more than 50% since Trump's election victory in November. The Kansas City Chiefs and the Philadelphia Eagles will meet in New Orleans for Super Bowl 59. It's a rematch of 2023's big game that will determine if the Chiefs can achieve the first ever Super Bowl three-peat. The Chiefs once again beat the Buffalo Bills at Arrowhead Stadium, becoming the first team to advance to the Super Bowl 5 times in 6 years. The Eagles trounced the Washington Commanders at home and will make their 3rd Super Bowl appearance in 8 years. And that's your brief. John.
Danny, thank you. This is just a convenient way of getting TV ratings up. Make sure the Chiefs get there. Am I doing this right?
Yeah,
Either
way, although if they always win, to Anne-Marie's point, is that really going to increase ratings?
Are they winning because the referees are letting them win? Is that what it's about?
Oh, I don't know.
No, I'm asking. It was a question, not an accusation.
Are they even real? Maybe they're just artificially intelligence-generated, images.
I find that NFL is all about marketing anyway.
Yeah, of course.
Yeah.
You mean that's like a little bit of action and
like 4 quarters. They don't really play much sport.
I know how
it's
you
a commercial.
feel about it.
Then
And
there's
yet you
another
watch
commercial.
it. So there you go.
I watch college football.
Oh.
The difference.
Oh, yeah.
Yeah, there's an affinity to your local team.
Oh,
They
yeah?
stay in one place.
Who's your local team?
Not just mercenaries.
No, they actually
Alabama, Roll Tide. Up next on the programme, DeepSeek, Reuters global markets.
There are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. I don't think anyone quite saw this coming, but it really does accentuate that need for diversification.
Equity futures here down by 2%, recovering just a touch. That conversation's up next. Equity futures on the S&P down across the board here. We are lower by more than 2% on the S&P 500. On the Nasdaq 100, we're negative by 3.7. The bond market receives a bid. Yields are lower by 10 basis points on a 10-year 4.52. Under surveillance this morning, DeepSeek Reuters global markets.
There are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. Valuations are really extended. So coming into this year, there were already going to be vulnerabilities. Now, I don't think anyone quite saw this coming, but it really does accentuate that need for diversification.
So here's the latest this morning. Chinese AI startup DeepSeek sparking concern over US tech dominance. Nvidia set for its biggest market cap drop on record if the current move holds. Jim Bianco of Bianco Research writing, we start the week worrying that Mag 7 technology is outdated and slow, thanks to DeepSeek. And while you can argue that it does not impact the S&P 493, Russell 2000 or the broader economy, it is a big market event. Jim joined us now for more. Jim, welcome to the programme, sir. First question, is this a big game changer?
It's a game changer for the Mag 7 stocks in that they're going to have to rethink what their, capex spending is going to be, and maybe even where they're going to go forward from here. Is it a big game changer for everybody else? Is it a game changer for the economy? No, it's not. But the Mag 7 stocks are 34% of the S&P. So if Nvidia's got a problem, maybe people get up and go to work and they don't have to worry about their job. But anybody who owns anything that is related to a broad base of the stock market, they have got a concern because of the dominance that these stocks have over everybody's investment returns.
Jim, there are a lot of questions about exactly how far DeepSeek's innovations can go in terms of really transforming to the negative NVIDIA's prospects. There is a larger takeaway, though. From your perspective, what does this say about how concentrated valuations got over the past year?
It's a direct mark on how they've gotten so concentrated, in that these 7 stocks, as much as we like to talk about the economy and the stock market and investment ideas, we're all tied to these 7 stocks. And in particular, we're all tied to NVIDIA. And whether or not you actually even know you own it or don't own it, and even if you don't own it, if this morning witnesses, it impacts not only your stock investments, but even the algorithmic response you're seeing out of the bond market with the big rally, because the stock market is down a lot. So it matters to everybody, even though it may not change the economic or fundamentals underlying some of the assumptions that they had just on Friday.
Well, Jim, to that point, when you talk about algorithmic read-through to the bond market, is that really what you attribute some of the rally that we're seeing this morning in U.S. Treasuries? Or do you think that this actually opens the door to the Federal Reserve having a more dovish message on Wednesday?
I don't think that it should open the door to the Fed. Nothing has changed. There's been no data out. The fundamentals and the belief that the Fed is going to hold on Wednesday still applies, and that they are going to hold on Wednesday. And so, about the only thing that's going to possibly change on Wednesday, I hate to say it, is that, they'll hold, and then President Trump will disparage them. It'll be a return to pre-pandemic levels like Powell has been hoping for 5 years, except not in the way that he was hoping it would get.
Is there a concern, you think, in the market about Fed independence? Because what you just said there, everyone's expecting Trump to disparage Jay Powell.
No, I don't think there is a big one, because I think that Jay Powell is, got a strong enough backbone that he understands it's going to happen, and he's not going to let it affect the policies that he wants to push forward from here. Now, whether or not that will affect Fed independence on who the next chairman is going to be, because presumably he is not going to appoint Powell, that's an open question. But for the short term, while Powell's still there, I don't think it is.
But don't you think that potentially Trump might start then dishing out some names, and you have this idea of what Scott Bessent, the soon-to-be Treasury Secretary, talked about at one point on the campaign trail as shadow Fed chair?
Yeah, and I've talked about that too, and I think that we're probably going to get a shadow Fed chair. But I think that was going to happen either way, whether or not the Fed, wind up cutting rates or not cutting rates, or wind up having a giant market response, in late January or not. We were going to probably on the road towards getting that shadow Fed chair, probably in the spring or summer.
Hey, Jim, appreciate your thoughts. Jim Bianco there of Bianco Research. Jim's talked about that a few times. That's got to be the biggest risk for the Federal Reserve.
Yeah.
For the chair, you completely remove his ability to deliver forward guidance if you have a shadow Fed chair over the next year.
And a lot of people are expecting this to be the case, with people already trying out, and we've talked about that and raised that question. This sort of tit for tat and the return to the past norms, how much does that actually affect the way that Chair Powell communicates in these news conferences, when clearly the actual pace of policy isn't even at issue right now? It's just simply the political maneuver.
I mean, arguably, he's a lame duck. And we just saw this play out when it comes to the presidency for 2.5 years. Donald Trump was making moves in the market. Everyone was paying attention because it didn't really matter who was sitting at the White House at that moment.
The market making moves right now. The Nasdaq is lower by 3.7%. Up next on the programme, Victoria Fernandez of Crossmark, Angelo Zino of CFRA, Neil Dutta of Renmac, and Oksana Aronov of JPMorgan Asset Management from New York. This is Bloomberg.
I am positive because it is definitely a change in tone.
There is a lot of optimism everywhere about what the U.S. could do.
There is reason for optimism. There are green shoots that people are able to point to.
The U.S. is at the epicenter of all discussions.
As America goes, so goes the world.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
All that Davos confidence, getting some ice-cold water poured over it this morning, in a market at least. Check out this calendar. Let's go through it together. The tech earnings over the next several weeks just got a whole lot more important. You'll hear from Meta and Microsoft on Wednesday. You'll hear from Alphabet next week alongside Amazon, then the big one at the end of this month. Next month, Nvidia. These are huge, given where the Nasdaq is right now, down by 3.8%, and the questions that will be asked about how much those companies, Meta and Microsoft, are spending on that company, Nvidia.
They already were huge because the big tech names that you just mentioned are what's been driving the rally that last week saw the S&P rise to a record level yet again. Now you add on top of it DeepSeek, a Chinese startup that really revolutionizes the efficiency of some of the artificial intelligence models, and suddenly a real question about whether the spending was for naught at some of these companies.
Well, the Information had a story out yesterday on how Meta has been scrambling and serious concern from some of their leaders that they are behind and they are in panic mode. Their leader for infrastructure directors said they are concerned the next version of their flagship AI won't perform as well as DeepSeek. So the question I have is this gap between Chinese tech and American tech. There's been this consensus that at least the U.S. is still a few years ahead. Is that still the consensus today?
Do you want some good news? Bonds are rallying. It's the good news this morning, right? They're at least working. We're down by 10 basis points on 10s, down by 8 on 2s.
Yeah, what did we just hear from Jim Bianco? Algorithmic selling or algorithmic buying, just simply on the downdraft that we're seeing in risk assets. I do wonder whether it opens the door, though, to a more dovish tone from the Fed, because everybody owns NVIDIA one way or another, and essentially where the stock market goes, so too does sentiment, and sentiment will be hit from this.
Sentiment getting hammered so far this morning, that's for sure. Coming up this hour, your lineup looks like this. We'll catch up with Victoria Fernandez of Crossmark Global Investments as investors await big tech earnings. Angelo Zino of CFRA as China's AI startup DeepSeek threatens U.S. tech dominance, and Nela Richardson of Renmac looking ahead to the first Fed decision of 2025. We begin this hour with stocks lower, much lower. Global equity slammed as investor worries over China AI startup DeepSeek lead to questions about U.S. tech leadership and valuations. Victoria Fernandez of Crossmark Global Investments with this to say: we expect high levels of volatility as markets try to find a broader footing than the highly concentrated environment of just a handful of tech names. There appears to be little room for error as we enter the new year with elevated sentiment levels and extremes in valuations. Victoria joins us now for more. Victoria, welcome to the programme. You, of course, wrote that before this big shakeout in the equity market. Can you share with us your thoughts this morning as to whether you really believe this is a threat to U.S. dominance?
Yeah, I don't know if I would say threat to U.S. dominance, Jonathan, but I do think it's a threat to the expectations that we had coming into this year, that we were going to have this extremely strong growth for this year, and that was going to lead the stock market higher and lead bond yields higher. So there is a threat to that component. And what does that mean in regards to the Fed? Obviously, the tech game can turn on a dime. We've seen it over the last 24 hours. I do think that the U.S. is probably still a little bit ahead in this race, in this tech race, because of all of the investment that we have put in there. But it looks like the story is China is not as far back as what people thought. They are much closer. So it leads to some questions. And obviously, we see that response in the markets today. And it also leads to the concern that the U.S.-China trade wars and the restrictions on chips and things like that could get even more heated, which will bring more volatility to this market.
So, Victoria, let's go through the individual components of the market breakdown in equities. And you can share with us where you'd be constructive and where maybe you'd be hands off. So you've got the likes of NVIDIA, the obvious place to start. That gets hammered. How many chips do we actually need to make this kind of progress? And then you've got the big spenders on those chips, the likes of Microsoft and Meta. They're getting some real competition. They've spent a lot of money. They're declining this morning. And then you've got the energy names as well. So the whole ecosystem's being questioned. The utilities that ran up aggressively over the last 12 months are getting hit this morning too. What would you be looking to pick up the pieces with, Victoria? What would you be willing to say, you know what, I'm going to stay away for the time being?
Yeah, so as you know, at Crossmark, we've actually been underweight a lot of these names versus the market over the past 9 months to 12 months, because we were taking a little bit off the table as things went along. So I think that's what you hopefully have done. So your position is a little bit less. I would not go in and pick names up right now at this point in time. I would let this shake out a little bit, unless you want to make a very tactical move and go in and be trading, every few hours or every day in these names. If you're a long-term investor, let this shake out a little bit. You're right. The whole ecosystem ecosystem from utilities to chips to the support to the software have all been rattled here. So I would actually look at some of the other areas of the market. I would look at some industrials. I would look at some financials and see if you could find some areas there to put your money to work while you let these elements kind of fade a little bit.
How does it influence, though? And there is still a lot to be learned in terms of how broadly applicable and how truly revolutionary this is. But Victoria, how much does it change your thesis on the energy space in particular at a time where already Donald Trump wants to increase the U.S. infrastructure and keep energy prices low?
Yeah, so obviously the energy names that are being hit today, there was such this huge expectation that demand would increase because of AI, that we were going to be building lots of data centers. We were going to need all of this power coming from these companies. And that tone has shifted. When you look at the oil companies, and you look at some of the other energy companies, though, we've been expecting that the price of oil is going to come down. We know that that's what this current administration wants to do. And that was going to be difficult for some of these companies. So we were already shifting and looking at more of the midstream, the transportation components of the oil and gas and the energy companies versus maybe some of the upstream or utilities themselves. So I think you can make that shift. And then if things change and the expectation starts to move higher again, you can add a little bit more back to that part of your portfolio.
There's another aspect of the trade this morning, and something Jim Bianco pointed to is simply algorithmic buying in the bond space. Does it change your view with the Fed's tone this week, given the fact that there was so much expectation around growth and even potentially a resurgence in inflation? Does this put a damper on that, given that where the stock market goes, so too does sentiment?
I think it does a little bit, Lisa. I mean, we've talked over the last few weeks about that rise in the longer end part of the curve, that it really wasn't due to inflation expectations. Break-evens have held pretty steady. It was due to term premium, to the growth that we were looking for. I mean, what IMF is saying 3.3% growth globally over the next couple of years. I have a feeling that'll probably come down if the AI story continues the way it is today. So if growth expectations are lower, that's why you're seeing that longer end part of the curve come down. And that steepness of the curve that has been a benefit for financials and for banks will start to go away a little bit. So it does shift the story. And I think it actually gives the Fed a little bit more room to take this pause because volatility is continuing to go up. Look at the VIX today. It's up, 30% just this morning. And it was a net speculative short position on VIX over the weekend. So I think we'll see a lot more volatility. That's going to give the Fed more time to pause.
Victoria, you have to forgive me. My head's kind of spinning here because there are these competing narratives that are hard to get my head around. You've got the AI revolution that may or may not transpire in short order as a result of greater efficiency. You have a Fed that's grappling with growth expectations and just where we are currently in the economy. And then you have politics overlaying on that, which is part of the reason why people were saying that bonds were selling off, that the deficit is just increasing dramatically, and that at some point the bond vigilantes are back. Which story are you paying most attention to? What's your sort of lodestar at a time of so many cross currents?
Yeah, you're right. I mean, there's different stories you can look at, and really depending on what you want your story to be, you can find the right evidence to back that up. For me, it's obviously the bond market. Not that we say the bond market's always right and the equity market isn't, but the bond market is giving us a lot of clues as to what's going on in regards to inflation expectations, in regards to growth expectations, in regards to debt issuance coming in. Obviously, that's tied to the political element and what we're going to see there. What is issuance going to look like? Is it going to be more bills? Is it going to be longer term coupons, which I think it probably will be? And what does that mean for interest expense? It's all tied together. But I'd be watching the bond market to see where yields go and how those bond vigilantes actually come in and how long they want to play this game. To me, that's what's going to drive the equity market, obviously along with earnings.
No sign of the vigilantes this morning so far, at least. Victoria, appreciate your time. Victoria Fernandez there of Crossmark Global Investment. Check out the bond market across the curve, 2-year, 10-year, 30-year, down 9 basis points on a 30. On a 10-year, down about 11. On a 2-year at the front end of the curve, we're down about 8. So a rally across the board in fixed income.
It should make the auctions that happen later today and later this week a lot better. There's $69 billion of 2-year notes and $70 billion of 5-year notes being sold later today, 7-year notes being sold tomorrow. Right now, a really good time to be selling. So maybe this is actually really beneficial for the U.S. Treasury Department, and they can send a thank you letter over to China.
Yes, to DeepSeek. It's a real confidence shock, isn't it? You think about some of the consensus trades into this year, long the United States, long US equities, concentrated risk there in big cap tech. We're seeing that unravel today. Long the US dollar, saw that unravel somewhat last week. And then in fixed income, worry about higher inflation, yields are going to creep higher, treasuries lower, everything just turns upside down this morning.
Yeah, but it also shows how much people really are just following a narrative without digging in. Because ultimately, a lot of people were saying that AI couldn't really lead to any kind of revolution in other sectors unless it was much less energy intensive. So this is actually a gift to so many people who are saying that at the same time that it really just highlights how expensive a couple stocks really had gotten.
Oh, big time, and how one-sided this market had become. A lot of that unravelling so far this morning. We'll see if it sticks. The opening bell about 1 hour and 20 minutes away. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John, just to revisit that, Chinese AI startup DeepSeek driving a global tech sell-off. NVIDIA down nearly 12%, TSMC nearly 11%. Its new model demonstrating performance similar to the world's top chatbots without that high price tag. It's built with open source tech and challenges the notion that China's AI technology is behind the U.S. A geopolitical scrimmage between the U.S. and Colombia. President Trump walked back his tariff plans on the country after reaching a deal on deported migrants. Colombia's president initially refused to allow military planes with migrants to land because of objections on the use of shackles. The White House declared that Colombia had agreed to all of President Trump's terms and will provide, quote, conditions of dignity. In sports, Jannik Sinner defended his title at the Australian Open, beating Alexander Zverev in the men's final to win his third Grand Slam. The world #1 player dominated the match, winning in straight sets without facing a break point. And in the women's tournament, a big upset. American Madison Keys upset top-ranked Aryna Sabalenka in a thriller to win her first ever Grand Slam title. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. More from Danny again in about 30 minutes' time. Up next on the programme, the Morning Calls Plus. Angelo Zino of CFRA as jitters over China's AI startup DeepSeek rips through equity markets worldwide. From New York City, this is Bloomberg. Equity futures on the S&P negative by 2 percentage points. We're down by 3.5% on the Nasdaq 100 with the opening bell about 1 hour and 15 minutes away. Let's get you some morning calls. Your first call from Raymond James, reiterating its strong buy on Meta. The team noting DeepSeek's innovations could lower model training costs for AI hyperscalers. Your second call from Citi, reiterating a buy on NVIDIA. With DeepSeek in mind, they say we don't expect leading AI companies would move away from more advanced GPUs. The stock is down this morning, still negative by 11.6%. And finally, Cantor Fitzgerald reiterating its overweight on NVIDIA, calling the DeepSeek announcement bullish for the AI industry. The argument essentially being, Lisa, that as efficiency goes up, demand's not going anywhere.
That essentially it'll actually increase demand if a number of companies can play around with and figure out how they can adapt AI models to potentially make themselves more efficient.
Sticking with tech this morning, Nasdaq futures well off session lows. They were down by 5% at 6 a.m. Eastern time, which is just amazing. US tech leaders under pressure ahead of earnings as the Chinese AI startup DeepSeek's latest model boosts cost effectiveness while running on less advanced chips. Angelo Zino of CFRA joined us now for more. Angelo, welcome to the program. What a time to catch up with you, sir. So Meta comes out and says it's going to spend north of $60 billion on CapEx this year, and then DeepSeek comes out and says, slow down, maybe you don't have to spend that much. Angelo, is this good news or bad news for the likes of Meta?
Yeah, I mean, it's amazing what a couple of days will do, right? But yeah, I mean, as far as kind of what this means specifically for Meta, I don't think it necessarily changes the story for Meta very much, to be honest with you. I think, the company kind of just, they announced their CapEx plan on Friday, the 60 to 65 billion. I think they're going to reiterate that when they report later this week. And, when we kind of think about some of the hyperscalers out there, we continue to think that they're very well positioned Given the free cash flow generation, kind of their business models, and their ability to continue to aggressively, spend on some of these next generation tools out there. But, whether or not, this allows them to potentially kind of lower their cost of modeling or what have you remains to be seen. But, I think at the end of the day, I don't think it changes it doesn't change the story much specifically for Meta. I think kind of some of these chip makers, that might be a little bit of a different story, though.
Angelo, it might not change things for management. I wonder if it changes things for investors. Do you think they'll carry on supporting the amount of spending that this company's doing?
I mean, listen, I think they're going to have to tell a really good story in terms of the monetization of AI when they do a report on Wednesday. I think the investors are going to kind of want, more clarity on how they plan to monetize AI. I think, the ROI potential is there for this company. Maybe not as clear as for some of the cloud companies out there and kind of the need to increase capacity and what have you. But I think it's extremely important for Meta on Wednesday to really kind of tell a clear-cut story on how they plan to monetize AI. You're gonna have Llama 4.0 ramp here in the first half of this year. Clearly Meta AI has seen kind of a significant increase in its kind of installed base. So there are definitely ways that, we think that they can kind of monetize AI here over the next couple of years. They've just got to make sure that they tell the story properly there for investors.
Angelo, how worried are you about a late 1999 moment where suddenly we have valuations on a story that actually is true, that there is a revolution going on, but that we don't fully understand what it is yet and who the winners actually will be? Do you think that there will be some more disruption that will be profound to the rally that we've seen so far at big tech?
Listen, I think you'll continue to see a lot of noise out there. I think the game's going to continue to change as far as kind of the AI ecosystem is concerned. As far as where valuations are concerned, what we do like about tech actually is, the valuations are not extreme at all. We do think for the most part, big tech, you've got growth at a reasonable price among, kind of, let's call it the Mag 5 names that I cover within, tech and comm services, not taking into account Amazon or Tesla within kind of that ecosystem. And you kind of, again, you look at those valuations out there, you look at kind of the secular drivers specifically tied to the cloud and digital ad spend, that continues to remain intact. And I don't actually think kind of a lot of this monetization AI potential is embedded in a lot of these kind of stories for these names. So I'm not necessarily worried about the valuations here. Again, I think as far as the chip industry is concerned, what you're going to see start happening is you're going to potentially start seeing multiple compression on any sort of rallies here, because I think there are going to be some concerns about kind of the magnitude of spend as we go into 2026 and 2027, not necessarily 2025.
All of that being said, Angelo, there was this theory out there that essentially if this efficiency story was correct, with artificial intelligence, it would be the non-tech names that would benefit that much more, simply because they wouldn't have to be as heavily cost-driven as they have been in the past. Does that concern you? Do you think that we're closer to that shift, that threshold in who benefits from future advancements?
Yeah, I mean, listen, I think that the story is going to continue to change in the market here in terms of who potential winners are, where you should kind of be investing and what have you. We continue to be, very big believers, kind of the way you invest kind of in AI long term is, the cloud companies we think are going to be the biggest beneficiaries out there, especially when you kind of look at some of those companies from a valuation perspective and the amount of capacity that you're going to need here, over the long term. We also think they're going to be select semi names out there, despite some of the concern out in the market right now, that will continue to benefit in the long term. And I'm not necessarily talking, just, cloud oriented in nature. So, but that said, I mean, there are going to continue to be narratives that change here over time. And I think investors, I think if you're, whether you're an investor or a trader, I think is also going to dictate how you kind of navigate through this market as well.
Do you think today is just the trader reaction, not the investor reaction?
Listen, I think there's a lot of kind of trading involved in this market right now. But, at the same time, there's, one thing the markets hate is uncertainty, right? And when you kind of think about the uncertainty that's been created here from this DeepSeek scenario out there, I think you got to sell off on some names or to compress some of those multiples out where the uncertainty is greatest. And I think specifically when you look at NVIDIA, and it's a name that we've liked here for a long time, I think you have to potentially put into question, do you need to kind of continue to upgrade at the pace that we've been upgrading at for a name like NVIDIA? I mean, these annual cadences now that NVIDIA is on, is the pace and the amount of spend that we've got on NVIDIA right now kind of warranted in nature? And I think time will tell on that. But that said, I mean, one of our biggest competitive advantages out there, or our biggest competitive advantage, is the fact that we have access to these leading edge GPUs and capabilities. So from that perspective, I do expect these hyperscalers to continue to aggressively invest.
That's what Dan Ives is also talking about this morning in his constant Twitter post following all of this. Given your work on Meta, I'd love to get your thoughts on the fact that the information has this story out saying that there's been a scramble and almost a panic at Meta, with leaders saying that they're not sure if the next Meta flagship AI version could perform as well as DeepSeek. So can they even catch up to what DeepSeek is doing? How much is this earnings call analysts and investors going to demand answers on whether or not they were paying attention to what the competition was doing?
Yeah, I mean, listen, I think the competitive landscape has definitely kind of intensified here in the last couple of days, and we do have to take China seriously at this point in time. I think it creates a lot. There are definitely a number of storylines here that are created also, from a privacy perspective and other type of storylines out here as well that I think the U.S. government is going to have to address. But as far as kind of the ability for kind of Meta's models now to be compared to the likes of DeepSeek and others out there, that's just, you're going to continue to see that. So listen, I think that competitive landscape, I think long term is good for the industry, but near term in nature, I think gets a lot of investors out there worried.
Angelo, appreciate your time this morning, sir. Thank you. Angelo Zino there of CFRA. Can see that worry across the board, see it in equity futures, see it in single names, certainly see it in NVIDIA. There's a lot of skepticism out there still this morning, though. Just how many chips were used, what chips were used. There'll be those questions. They won't go anywhere. And right now, Elon Musk has been weighing in on that. This one AI CEO, Alexander Wang, said that DeepSeek has about 50,000 NVIDIA H100s they can't talk about because of the U.S. export controls that are in place on X. Elon Musk responded, obviously. So that speaks to that skepticism of just how much they cannot disclose about what they used simply because of some of these restrictions the U.S. has put in place.
So basically, the restrictions are there, but they went around them and found these chips anyway. I think a lot of people are questioning whether or not they've used them. That has got to be the question. Look, this speaks to two things. It's not just the degree of the breakthrough. Lisa, we talked about this earlier. It's also how one-sided the market was going into this news. So you've got to think about that with regard to the price action you're seeing on the screen when you see the Nasdaq down by close to 4%. This was the main driver of the new record high that we had last week and what we saw last year. It just goes to the skepticism of how much further it can rally and how you can price out what multiples should look like at a time where we are in a transformative period of time with a lot of changes down the pike. It's definitely one way of shaking up a U.S. equity market if you wanted to. That's for sure. Oh, that was well put. Up next on the programme, Nela Richardson of Renmark and Oksana Aronov of JPMorgan Asset Management. From New York, not implying anything. No, this is Bloomberg. It's going to be quite an open. 60 minutes away. Equity futures look like this. We're down by 2% on the S&P, down by 3.4 on the Nasdaq. Nasdaq 100 was down by 5. Unreal. Off-session lows then, with some movers going into that opening bell. Let's get them. Here's Manus Cranny. Hey, Manus.
Jonathan, good morning to you. We're looking at history in the making. It is the biggest equity wipeout in the history of the equity market. Every 1% that NVIDIA drops is the equivalent of $35 billion. So you're looking at just under $400 billion of a wipeout. The question is the exclusivity, the moat that's built around the high-end chips within NVIDIA. Do you need to torpedo some of the assumptions that you've made in terms of the capex that all of the hyperscalers are making? Citi question DeepSeek's not using advanced chips. They keep a buy and $175 on that. And that is the big question that is being asked in the market. How can DeepSeek use 97% less power and deliver something at many multiples lower in price? The reverberations are profound. Meta has 4 war rooms on the go to understand what did DeepSeek actually deliver. Of course, they're going to have to stand up their step up in capex that they promised the market, $65 billion from $51 billion. You've got a show and tell moment on the way in 2025. We've been told that before, but that has now been accelerated with this move from DeepSeek. Finish off with the last flurry on Microsoft. We're down just under 4%. Again, it's a huge investment that they've made behind Sam Altman and OpenAI. It's not questioning whether they're going to continue that relationship, but if you think about it, they spent $500 million in terms of this space relative to the theoretical $6 million from DeepSeek. That's the kite that's being flown by many of the American houses in terms of the lack of trustworthiness and veracity of the information that you're being given. And I emphasize the word there, that is the kite that is being flown. We need proof and tell moments. Jonathan.
Manus Cranny, agreed. Thank you, sir. Lots of earnings this week. Meta, Microsoft, 2 of the companies reporting. Those earnings dropping on Wednesday. And that becomes must-watch, doesn't it, later this week?
How do they justify where they're spending? How do they pivot? We were talking to Mandeep saying about how fungible that spending is, how much they transfer it to other areas that could potentially give them more payback. I just want to say the level of trolling out there, A+. Rich Greenfield, he gets A+++. What
did Rich say?
He asked ChatGPT, quote, what does DeepSeek do differently than ChatGPT to reduce costs? And then it forced ChatGPT to explain why DeepSeek was preferable to
themselves. Did it give a good answer?
It was cribbed from different news articles, which highlights exactly what it was doing, which is the reason why people are looking at DeepSeek.
Interesting how long it took for this debate to become a market event, right? You could just feel the buzz over the weekend. It just became much, much bigger, even though this is something that came out a week or so ago.
Yeah, there were different Chinese developers that were talking about this about 7 months ago. But again, it goes to the point we were talking about. It's sort of, I don't want to call it a squirrel, because this is actually potentially a game changer.
Well, you did call it a squirrel.
Well, okay, but I'm just saying that there are things that catch the market's attention, and this one is, highlighting the vulnerability in some of the valuations.
If this is a squirrel, are you saying the Nasdaq is like a golden retriever? Is that what you're suggesting? No?
Well, I mean, one in Rome.
All right. Let's turn to the Federal Reserve. Difficult to turn to the Federal Reserve. Hardly anyone's talking about the Federal Reserve. The FOMC widely expected to hold rates steady at its first meeting of the year on Wednesday. Investors bracing for further data on the state of inflation. Neil Dutta of Renmax saying, for our call, it has been one step forward and one step back. Inflation has resumed its cooling trend, while real activity strengthened in December. Neil joins us now for more. Neil, good to see you, sir.
Good to see you, John.
Thanks for dropping by, buddy. Appreciate it. Let's talk about the state of this economy, because you're often constructive on where we are. But coming into 2025, relative to, I would say, the crowd, you had much more questions, I think, on the state of this economy. How strong is the US economy?
Well, I think on the surface, it's quite strong. I mean, we're probably going to get a GDP number this week that shows growth running 2.5% to 3%. But I think when you look under the surface and you peel back the onion a little bit, there's a lot there left to be desired, I think. I mean, the housing market, I think, is quite sluggish. Mortgage rates are still above 7%. There's really not much going on with respect to sales activity. And there's increasing slack in the single-family residential market. If you look at new homes completed for sale, that's up over 50% against last year. So that's going to weigh on construction. The stuff you were talking about around the table on tech, I mean, remember, that has become an increasing part of what's driving growth. I mean, some estimates say that tech CapEx is, the sort of gamut of AI data centers, hardware, software, all of that is adding half a percentage point to GDP, something akin to what we saw in the late 90s. So if that starts to go, what do you really have left? I mean, so I would say that what we have is a very imbalanced economy. And the labor markets are still cooling. I mean, with all deference to the last jobs number, we know that the quits rate is at cycle lows. What do you think that means for wages, which in turn will put downward pressure on consumption? So I think, for me, I think the consensus is a little bit too optimistic about growth, a little bit too pessimistic around inflation. I think that means that we're probably going to get more than 2 rate cuts this year.
Just to unpack some of that, and we'll get to the conclusion in just a moment, I think the point that you made on tech CapEx is an important one. Is this a macro story? And Lisa, it would go to a question that you asked a little bit earlier about what was happening in the bond market. bond yields down by 9 basis points, some people might suggest it is.
That essentially it's propping up and giving a rosy sheen to all of the data that we've seen, and that, frankly, that increase in asset prices has fed into this enthusiasm that a lot of people have had that have kept going some of these inflation fears in a more significant way.
Neil, you talked about housing as well. Let's pick up on that point. You've been pretty consistent on this theme. This housing market does not work with interest rates where they are. That's a housing problem or a broader economic problem?
I think it starts off as a housing problem and then becomes a broader economic. I mean, remember, construction employment has been a notable bright spot in the labor market. So if there's slack building and residential construction begins to decline, I mean, we're seeing the builders telling us that they're going to bring their starts in line with sales. Well, if sales are weakening, what do you think that means for starts? It means fewer starts, which in turn will imply less construction employment. And then, you know, I mean, that's a problem. So, you know, look, I mean, I think it can only, I mean, at some level, right, if the Fed can't stimulate activity in the housing market, what are they really doing? I mean, so a lot of what's going on right now, I think, is strong government spending at federal, state, local governments kind of offsetting a lot of the squeeze that we're seeing in the housing market. But if you start to see state and local government spending slow down, which I think is probable this year, you know, that's going to put even more of a light on what's going on with housing.
What makes you convinced that if the Fed does cut by more than 50 basis points this year, there will be no upward pressure on inflation at a time where you see that there's a lot of uncertainty and inflation expectations have been wobbling around and inflecting upward in different readings, depending on political persuasion?
Well, I don't think that inflation expectations are really drifting upward. So, Lisa, I disagree with the premise of what you're saying, but I would just
always love having you.
I would just say, I mean, inflation expectations are I think stable, but I mean, to answer your question, rental inflation will continue to slow down for the foreseeable future. We know that based on a wide variety of data, whether that's you know, the all-tenant rent index that came out from the BLS last week, or just the single-family home price index or home rent index that came out from CoreLogic. We know that inflation is a lagging indicator, so I would expect that even after the Fed cuts, you'll continue to see this downward pressure on rents going forward.
Maybe on rents, right? So this has sort of been the tale of different markets, and the housing market has certainly been marching to a drummer of its own accord. But on a broader market scale, you've seen airline prices surge. You see, depending on the markets, there's
okay,
sort of
but
surge
like when you
pricing
talk
in hotels.
Sure, but when you talk about airline, well, eggs. I mean, the Fed can't do anything about culling of birds. I mean, but. When you talk about airlines, for example, I mean, how are they driving those higher prices? They're cutting capacity, right? So in nominal dollars, is air spending actually going up? I'd argue probably not. That's not the kind of inflation the Fed really should be concerned about. I mean, ultimately, it comes down to compensation growth and whether that equals inflation and productivity over time. And what we know about compensation growth is that it is slowing.
Just quickly, one thing, when we were in Davos, a number of different executive management firms said that it seemed like the labor market was a lot tighter than what we'd been expecting, and that actually on the margins for certain areas, you could potentially see an increase in salaries in certain places, in certain industries. You reject that?
Yes.
Neil, let's talk about policy uncertainty. That was a quick one, yes or no?
Can you two start a show? I mean, I would watch. Just a weekly podcast.
I would just, I mean, if you feel that strongly about the tight labor market, how come it's increasingly likely that firms are holding their workers flat on their pay? I mean, you don't actually cut the wages of the people outright, but you do hold them flat, and that's actually going up. So I would, you know, again, I reject the premise of that. I mean,
so you think employees have the leverage right now?
I think employers have the leverage. If there's so much slack in the labor market, why are you all calling your workers back 5 days a week into the office?
True, because COVID is over, and they should have been back already, some would say.
Well, I mean, that's a sign that workers are losing their leverage in the labor market.
Let's talk about policy uncertainty, because you have a different view than most people. Most people, when they say policy uncertainty, they're concerned about Trump and tariffs and trade. And you actually have certainty when it comes to potentially some of the policy action we might see out of this White House.
I mean, you always have to ask yourself that the people whining about policy uncertainty out there right now, would they be saying the same thing if the shoe were on the other foot? Would they be lamenting the policy uncertainty around
tax law? You mean if Kamala
law,
Harris won?
Around tax law at the end of the year? That would be a huge uncertainty. So I just think it's kind of interesting seeing what people are picking and choosing. What's pretty obvious to me is that the corporate sector is giving the new administration the benefit of the doubt, okay? if there's more tariff uncertainty, is that the price you have to pay for a more improved regulatory framework on the back end? I mean, if you look at capital spending intentions, at least up until recently, they've been going up, not down. So for all this sort of policy uncertainty and so on and so forth, I mean, I just think there's always going to be uncertainty when the tides change, okay? But it's just interesting to see what uncertainty people are thinking about. So I think it's a bit of a red herring, quite frankly. There are lots of reasons to be concerned about the economy. Policy uncertainty is very low on the list. And I would add, the Fed is a source of uncertainty. No one wants to talk about that. There's always you talk about Democrats and Republicans. On the street, it's, are you siding with the administration or the Fed, right?
Sure.
Those are the political parties that we think about. And I would just say, I think the Fed's a source of uncertainty to some extent. The reason being, we're not going to prejudge. We're not going to speculate in November. 6 weeks later, they do exactly that. And nothing's even happened yet, by the way. And we're going into the year with 2 solid inflation readings. So I think it's interesting that they cut 100 basis points. New guy walks through the door.
And then they start assuming different policies.
Yeah.
Now, what was that about? What explains the difference between the Fed's approach under Biden and the Fed's approach once they knew that Donald Trump was elected? Former Vice Chair Rich Crowder sat in your seat a few weeks ago and asked that question. He basically said it was an analytical error that led us to wait when we allowed inflation to get away from us. That was just an analytical mistake. And this isn't about bias. This is about policy. How do you explain things?
Well, I don't think the Fed is just innocently responding to the data. I mean, if you look at the magnitude of the forecast revisions, frankly, they were bigger at the time of the June FOMC meeting when the Fed was backing off. I mean, if you remember, we went into 24, people were betting on the March cut, and then we kind of backed off. I don't think the Fed is just innocently responding to the data, if you know what I'm saying, right? I mean, so I think that they're basically taking out an insurance policy against tariffs. And so, you're kind of getting into a game of chicken with the administration. So if we get to February 1st and President Trump doesn't decide to do tariffs, or, most of the tariff action so far hasn't really been about reorienting the global trading system. It's really been about trying to extract concessions on things unrelated to economics. So what if you go to February 1st, there's no tariffs put on, then you're back to focusing on the data and inflation, and then what do you have? The Fed may look pretty foolish by March because you may have an abrupt about face.
No, I appreciate your time. As always, thank you, sir. No doubt there of Renmark. It feels like those two are on a collision course this year.
What, the Fed and Donald Trump?
Or Lisa and Neil?
No, the Fed and Donald Trump. They were on a collision course a long time ago.
Yeah, it's fun. It's always it sharpens the tools. I think that look, there is a question of what's noise and what's signal, and I think that to Neil's point, there is a lot that has been noise, and people will focus on that. The signal, where does it actually come from? The housing market certainly has been a place where basically you've seen the lowest number of sales since 1984 in the past year, or 1994, I believe. There is a larger question, though. There are some policies that will have economic ramifications.
Yeah.
And how do we focus on those rather than the others?
Let's focus on that now. Let's get you some signal. Mike McKee, our Bloomberg economics and policy correspondent. Mike, a big week for the Federal Reserve.
It is a big week for the Fed, but I'm wondering how much impact it will actually have on the markets. Neil and I were talking before he went on with you, and there's so much going on down in Washington that it's hard to know whether the Fed is going to make a huge difference to the markets, since at this point, nobody's expecting them to do anything. It's really going to come down to what Jay Powell has to say. We also have jobless claims, PCE data on Thursday and Friday, and GDP on Thursday, which is going to be important because it's going to show some strength in the economy, and we'll have to look at the underlying areas and see where that strength is and what it portends for the future. Certainly not going to be looking for any strength in residential investment, but we'll also see where the Fed is in terms of its own inflation indicator. And then we'll see. Right now, what you're looking at is a market that has almost come full circle since the last time the Fed met. Just before the Fed met, they were pricing in more than 2 rate cuts, almost all the way to 3. The red lines there, the yellow lines are now where we are. We're back to 2 rate cuts by the end of the year, but just barely. We'll see how that moves next week once we get through this data. And, of course, as Neil points out, February 1st.
Mike McKee, appreciate it. February 1st, the big one for trade. Lisa, there's only one analyst note that I'm going to read on Wednesday after the news conference. Just one, from Donald J. Trump. That's the only note I want to read. The only strategist note I want to read, his take on Chairman Powell's news conference.
I can tell you right now, completely out of touch, not understanding. Interest rates needs to be lower. Lower interest rates now. I know what I'm talking about.
You won't need to wait till after the press conference. Once we get the decision, there'll be a truth ready to go on demand.
A live blog at the White House.
Yeah.
I'm all for it. I can't wait for it. A flight to safety in the bond market driving yields lower this morning following the massive tech sell-off we've seen all morning so far. Oksana Aronov of JPMorgan Asset Management joins us now, not just to talk about that, but more broadly, how this market's priced. Oksana, it's good to see you.
Good to see you. Thanks for having me.
Thanks for being here. We had this conversation with Neil Dutta just before you about inflation. Neil didn't buy the premise of Lisa's question, doesn't think inflation's going to be a problem. Maybe we continue to see that disinflationary trend. I imagine you take the other side of things from your perspective. Do you think this bond market is well priced for the inflation that you expect?
Definitely not. And I actually want to take a step back because, of course, everyone is an AI expert this morning. And without being one, I do want to point out that it is fascinating how, the narrative that the stock market is getting kind of euphoric has been out there for a long time. And I always say you couldn't know how much farther the stock market can run, right? It kept posting record highs and record highs dozens of times. And then a catalyst comes in. No one anticipated it, and suddenly you're tumbling. And I think it's a very appropriate analogy to the credit market, and we'll talk about interest rates in a second, but I think in a credit market, you always know exactly if you are wildly overpriced. And when we look at credit spreads today in the 200s for junk bonds, for example, is that a top? Yeah, I mean, could it go a little bit lower than this, tighter than this? Possibly. But if you want actually, a pretty sure indicator of richness, here's a market that is screaming rich.
Well, just to build on that, one theory out there has been that all-in yields are fairly high and they're compensating you for risks that seem to have been minimized because people have pushed out their maturity walls and you are seeing that credit conditions look pretty good. What about conditions makes you think this is a top?
So all-in yields are higher because the risk-free rate is higher. And the risk-free rate, I do agree, going back to your original question, John, that we are probably in for continued pressure at the long end of the curve because, fiscal spending is continuing unabated. That is an enormous amount of spending for this economy. And even in light of the news this morning, are we going to continue to see tremendous spending in the AI space, in the data center space? Absolutely. And that's also a huge driver. We're seeing a majority of companies planning to raise prices. We're seeing ISM service prices moving up. We're seeing the labor market continuing to be resilient, right? There's lots of really constructive things. In fact, you have to really look to find what is not constructive. And I think it's very possible that the Fed is going to have to take some of their cuts back this year because inflation is at best stuck at these levels right now, which means the 10-year is not priced for a higher for longer, structurally higher for longer inflation. It's still very much priced for kind of a 2% world. So all-in yields are higher because the risk-free rate is somewhat higher, but the actual compensation you're getting for the risk associated with each sector, such as lower-rated credit, is definitely at all-time tights.
We're speaking as the bond market has a huge rally because of the sell-off in big tech, and you just said something that I want to develop. You said there is a good chance the Fed takes back some of its cuts. Are you talking about hiking rates?
Yes.
This year?
It's a possibility. It's not a 0% possibility. And I bring it up because I think everyone has sort of dismissed it as a possibility. Certainly the bar for that is not low. But if we continue to see inflation stuck here or moving up, which is not outside the realm of possibility, I mean, we'll see how this technology story develops. It's certainly very meaningful and cannot be discarded. But the reason for higher rates at the long end has been, yes, growth to some extent, and the growth continues to be, expectations around there continue to be robust in the realm of 3%, but also this fiscal spending. And if you think about this administration, and again, we don't know what they're going to do, but everything they're saying around tariffs, around immigration, right, every policy out there is inflationary at the end of the day, and the Fed can only kind of control the front end. And if they feel like they're losing control of the front end, which is not a zero probability event, you're going to have to you're going to see them have to kind of try to take back the day.
Based off that thinking, then do you think it was a mistake that the Fed cut last year?
Absolutely.
Yeah, so they weren't
Absolutely.
restrictive.
They, the level of rates when we got to 5.5%, I think it was very clear that nothing in this economy was tremendously restricted. And when we looked at financial conditions, they were actually quite loose. And by lowering rates, they made those financial conditions even looser. And therefore, we're seeing inflation expectations creep up and we're seeing animal spirits return. And some of that is due to the expectations around, again, this administration. But I do absolutely think it was a mistake. There was nothing causing them to do anything. Nothing was breaking. They could have just been sitting there and observing the data.
Two very different views in the last 20 minutes or so. That's what makes a market. Oksana, it's good to see you. Thanks for dropping by.
See you.
Oksana Aronov there of JPMorgan Asset Management. Equity futures still lower going into the opening bell. Up next on the programme, we'll set you up for a big week ahead. Not so much about the Federal Reserve, but lots on tech results. The conversation up next. "36 minutes away from the opening bell. Let's see if these moves stick. We're down by 2% on the S&P, negative 3.5 on the Nasdaq 100, and Nvidia is down by double digits. This week gets a lot more interesting than it could have been. Coming up a little bit later, we'll hear from the president addressing House Republicans at a conference in Miami tomorrow. Durable goods Wednesday, a Fed rate decision, and Fed Chair Jay Powell news conference, plus earnings. And these are the big ones: Microsoft, Meta, Tesla Thursday, Apple, and Intel report. We'll round it out with some PCE data on Friday. But Lisa, it's got to be about big tech this week and nothing else.
Yeah, how much they respond to this DeepSeek development and where exactly they're putting their money, how they expect to really expand their capital expenditures or not in the coming years.
Already we see Meta responding. They have these war rooms. They're concerned that China is advanced. The question I have is, what's this gap now between China advanced tech and AI versus the United States? And is it real? Is it DeepSeek or is it deep fake?
Exactly. Was this achieved with or without some of the leading cutting-edge technology coming out of NVIDIA?
What some people are suggesting is they had that cutting-edge technology. It still increases efficiency, but they wouldn't have been able to do this without the open model that Meta had been using. I expect to hear some questions on that with Meta.
I imagine we'll get tons of questions later this week, particularly for Mark Zuckerberg and the team over at Meta on Wednesday. Coming up tomorrow, lots of questions for Jeff Yu of BNY. We'll catch up with Tom Kennedy of JPMorgan, Sheila Coyote of Jefferies, Lauren Goodwin of New York Life, and many, many more. From New York City this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.